Welcome back to Yahoo Finance. Now, lumber prices are rebounding today from a 2022 low. And Ferre has more on the price action of the essential building material. So for more, we turn to Yahoo Finance's Ines Ferre. Ines, what are you seeing now?
Yeah, Rochelle, we are seeing a bit of a rebound, but keep in mind that just yesterday, lumber futures hit a 2022 low. So let's take a look at the charts on our Wi-Fi Interactive. You can see that lumber futures right now just above $431 per thousand feet. One, by the way, is a 12-inch by 12-inch wide piece of wood. So basically, you are looking at these lumber prices that have basically plummeted year to date. You're looking at the price action down 61%. And a lot of this, of course, has to do with the rising mortgage rates. So as we are seeing a slowing housing market and mortgage rates are inching closer and closer towards 7%, you've got home builders that are shying away from buying materials. You had KB Home, you had Lennar in their recent quarterly report, basically saying that they canceled some lot purchases. I also spoke to a commodity broker who told me, look, because supply chain issues are better now, there is no sense in slowing the market for these home builders to be piling up wood. So you are looking right now at these levels that are pre-pandemic. I'm going to pull up now a 3-year chart. Let's see. I'm going to pull up a 5-year chart here, so you can see that you are looking at pre-pandemic levels for lumber. Lumber losing all of its pandemic gains, guys.
All right, thank you, Ines Ferre. Dave?
Thank you, Michelle. More now on the housing market. Mortgage rates, as we mentioned, are continuing to climb, headed towards 7% on the 30-year, more than doubling from a year ago. Inventory remains low. Prices are cooling across the country. Contracts are being canceled and projects stalling. And then, surprise, new home sales today shooting right back up, jumping 28% in August. That's according to the Department of Housing and Urban Development. 685,000 new homes were sold just last month. Shadow, the dynamic overall has not changed in a number of months. We will continue to see exceptions, bounces here and there, but overall, the Fed is determined to win this fight. And we saw housing begin to struggle before any other portion of this economy. And we're going to see that falling off in prices across the country, with notable exceptions, Miami coming up later in the show. They will win this fight. And the problem is these mortgage rates are keeping sellers and buyers on the sideline, because as we argued with Will Smith, you're not going to upgrade to a bigger home if you're going to pay double your mortgage rate right now. You're just not going to do it. And you're also not going to sell right now because of that.
Exactly. And also, if you're a first-time home buyer, you now have a less likelihood of being able to afford a home with a mortgage right now, nearly double what it was during the pandemic. So comparatively speaking, obviously, the housing market here showing signs that it is slowing. The new home sales number stuck out to me. Yes, you can take a look at that number, 29% jump. Yeah, we have seen some commentary, a number of economists weighing in on this. Greg Dacko of EY Parthenon, who was on the show yesterday, he tweeted out this morning that this number was likely a head fake, because you also have to keep in mind those inventory levels. Simply, home builders are not building the number of homes that are needed right now in order to really help the supply. You also have the fact that sellers aren't selling because of that higher mortgage rate that you were just talking about. Zillow was out with a report saying that new listings dropping nearly 23% August from a year ago. So, Rochelle, it's hard. I don't think there's any argument to the fact that, yes, the housing market is slowing, but obviously the degree of this slowing and what we could potentially see over the coming months is what people are doing.
I mean, and it's tough, though, because as we see, mortgage rates, when you compare them to where they were, say, in the 90s, obviously compared to back then, things would look pretty good. But you have to remember, we were in a place where we had historically low mortgage rates for a very long time. And even over the course of the pandemic, when you look at the size of the millennial population, households have grown, the size of them have grown. So they do still have a need to get into a place. Rents are still too unaffordable. So there is that need. They do have a need for these things. So it's interesting to see then, though, a lot of these lumber, these home builders saying, look, it's not worth for us to do it right now if some of these people just want to stay on the sidelines. But at a certain point, as we're seeing, though, once we saw some of this, the frothiness, we saw people sort of waiving every contingency with houses. Now that we're not seeing that as much, perhaps we might start to see people trying to come back into the housing market for the first time.
Yeah, the people that you are hearing from right now are those that bought at that massive peak of the pandemic. Those are people who are worried, who are inevitably going to lose 20 to 30% of their value because they bought at ridiculous rates. Now, those that want to say this is like 2008, 2009, 2012, nothing like it. We're not built on a house of cards like we were back then with those types of loans being thrown out. And the bottom line is the inventory, though it's coming up, is still historically low. So these prices don't have very far to fall.
And it's also interesting just looking at some of this data in terms of home buyers backing out too. Like that's another dynamic that's playing out right now, especially in some of these Sunbelt cities. And these were the cities that attracted so many people, so many new homeowners during the pandemic. You know, the fallout that we've seen there. Jacksonville, Florida, 26% of buyers backed out of contracts in August. Las Vegas, 23%. Atlanta, nearly 23%. Orlando, Florida, which you are just back from, nearly 22% of buyers backing out of these contracts. So as we start to see potentially that picking up as well, obviously this could really spell much more trouble here for the housing sector.
And certainly a bit of more than you can chew when you signed up for this before the rate rising period kicked in. So a tough spot for homeowners and those prospective buyers right now. All right, well, coming up, Domino's shares taking a hit after an analyst lowered the company's price target. We'll give you the reasons why next.
What's up, Brandon? What's up, Brandon?
Oh snap! What up, Mo? What you listening to?
It was Yahoo Finance, and don't tell me y'all don't listen to Yahoo Finance now, because I'm a scream. Look, I play Bloomberg in the morning. Like we don't listen to Bloomberg. I'm like, listen, y'all messing up my little show. I'm trying to learn this financial terms and market, and you know.
Who said they don't listen to Bloomberg?
I can't remember who on the panel. They said it the other day, and it's like we listen to these people in every episode. I was just like, I'm trying to, because I'm trying to get my global terminology down, like you guys, the stuff that you all know. I'm trying to get a little bit more worldwide, so I'm trying to listen to the news in the background, and then try to get some ideas of, who to be looking at in the market. So I said, on Urban Economic, I'm gonna play Yahoo Finance and see what they got going. I've been listening to it all day. They've been talking some good stuff. Not good stuff, but been giving some really good understanding of what's going on. So that's why it's on commercials. So that's why I paused it. So I was gonna let it rock out, and then we could talk about some of the things that they talk about.
All right, well, look at you. Woo, you're gonna be dangerous.
I'm getting better.
If you're not dangerous now, you're dangerous.
All right, so let's see if they back on.
We're gonna start a Mo fund. I'm gonna help you fund your fund, Mo.
Okay, for my scholarship.
Starting off with my pick, Dr. Pepper, ticker symbol KDP. Now, shares of the beverage maker under pressure this afternoon, down about 3% there, falling this afternoon after a downgrade from Goldman Sachs to neutral from buy. Now, as the reason for caution, Bonnie Herzog and her team at Goldman, they cited increased risk to margins as commodity inflation, especially coffee-related, remains elevated for KDP versus its peers, based on Goldman's updated commodity tracker. So they also lowered full year 2022 and 2023 estimates slightly, putting them below consensus. Now, on top of that, though, you have other headwinds for KDP that include brewer household penetration starting to normalize. You have pod attach rates moderating, and then, of course, a slowdown in their packaged beverage business growth market and market share gains also slowing as well. But not all bad news. Goldman also said that KDP is still executing well despite the challenging environment and also has strong underlying momentum in its coffee and packaged beverage businesses. And they also highlighted ongoing initiatives to expand and enhance distribution capabilities. So clearly not a bad day for KDP at this point, but obviously that caution, though, really weighing on the stock. As we said, they're down about 3% today, Sean.
Yeah, higher commodity prices, obviously an issue here for Keurig Dr. Pepper, also an issue for many of their peers out there. It's interesting, though, that this call is coming out now because the company has actually been able to weather the uptick that we've seen in coffee prices relatively well. Taking a look at that one-year chart, the stock is still in the green. Yes, it's getting hit today because of this call from Goldman Sachs, but over the past year, stock up still about 6%. So we'll see how high potentially the coffee prices might climb and when, of course, that will be an issue here for Keurig Dr. Pepper. All right, my play today, Domino's. Cowen lowering its price target on the stock because of two headwinds, they say. Delivery driver staffing levels and also a slower pace of store openings potentially. Now, analyst Andrew Charles writing in a note that staffing levels for delivery drivers has plateaued in the current quarter, and that quote does not lend confidence to an acceleration year in three-year trends. He also pointed to a risk that 2023 openings trailing the 6 to 8% long-term guidance that we got out here from Domino's ahead of time. Cowen updating its price target to just about $362, comparing that to where we are today at $314 a share, still about an 11% upside. So yes, Cowen reining in some of their expectations, Dave, when it comes to what they expect to see over the next 12 months, although still much higher from where we're trading today.
Contreras is BMO analyst Andrew Strelzik. He's got a buy at a $430 price target. That's a 35% upside, citing their own survey that says 80% of their own respondents indicated a desire to increase spending over pizza in the next 6 months. This is recession food. Domino's Pizza, you know, is my personal favorite. And if we do hit a recession,
I don't understand that. But that's a whole other
three-item pizzas is a
You
steal.
can't beat the price. The taste you can beat elsewhere. I know, we can debate about it. We live in one of the best cities for pizza, and you order Domino's.
It's
but
tremendous.
All right,
It's delightful. I'm going to get you some Domino's. You are going to love it. My play is General Motors throwing return to office plans in straight reverse. On Friday, GM announced plans to bring corporate workers back to physical locations at least 3 days per week later this year. After significant backlash from employees, though, today they walked back that plan, saying they won't be mandating specific in-office days, and they'll leave that up to the individual teams. GM said it will announce further updates by the end of next month after spending the next few weeks, quote, continuing to listen to feedback. Now, Ford, on the other hand, has also updated its return policy, recently emphasizing their increased flexibility is what they think is a real advantage in hiring top talent. Shares of GM down more than 40% year to date, and down today just about 1%. We're down much bigger earlier on. Overall, part of a much bigger discussion on return to office plans. And clearly right now, Rochelle, it looks like a tight labor market is going to win out because all these companies get out there, they announce these plans, and then they slowly walk them back over backlash. And that looks to be the deal until a recession, if a recession hits, and then we might see everyone return to office.
I mean, it's true because we've seen the stick method where they try and force you to come back. We've tried the carrot method where they'll include all kinds of perks. They're like, oh, you want to play pickleball? You want to do this? But at the end of the day, though, from the surveys that I've seen from different work from home surveys, the main reason that people aren't coming back is because they have a lack of compelling reason to want to come back physically. If they're seeing that they're just as productive outside of the office, they're trying to find a reason to have to come back. And WFH research actually found that just 49% of employers who told them they had to return to the office full-time 5 days a week actually ended up turning up. So you can't really reprimand or fire people in the labor market this tight once you've really invested in them. So I don't think this is changing anytime soon until, as you mentioned, recession hits and the job losses become more severe. People really have to think twice about it. At least for now, it does seem to be in the employees' favor, Sean.
I don't know. It could happen much sooner than we think. If we do start hitting some of those unemployment projections that the Fed has said, we certainly will see they think we will see a slowdown in the labor market, in the jobs market. So, of course, that would give management at some of these companies an upper hand because employees won't have too many options, at least to go elsewhere for the time being. I still think this whole return to office saga, how it's playing out, is interesting to me because it makes sense to be back in the office. I get the whole hybrid schedule. I get that maybe you only want to be back 2 or 3 days a week. That makes a lot of sense. But being back in the office is much more productive, I think, team-wise, than everyone working from home, just in terms of the culture, building relationships, being able to have those one-off conversations, especially with your manager. That doesn't happen as often when you are working from home, at least when we were working from home from some time before we came back to the studio. So I think there is a reason. I do think these managers have a point here in trying to get their workers back to the office.
Yeah, and also don't factor the sideline deals. I'm not just talking about big deals that are made like at conferences, but what happens on the sideline, whether it's after work at getting a beer, makes a huge amount of difference. Unfortunately, we can't have a debate
posting on social media about your
Rochelle, get back in office, all right?
Rochelle, you got to move up here to New York.
Half the people say, no thanks. So what can you do?
All right, well, moving on here, the Department of Transportation announced it has approved all 50 states' plans for the first nationwide network of EV charging stations. We'll find out how big of a first step this could be next.
All right, Brandon, what'd you think? Dr. Pepper, GM, Domino's.
Domino's. 100%. I think Domino's is a recession-proof company. I mean, if you look at it on the chart, they've been killing since 2008. I mean, somehow they 2008. Well, no, the lift off was around 2008, 2009, and from there it's just been going up, the upside. And like every other company, they profit into what is that, the government, on trying to get their hand into the pot and get in the bag. I mean, and then when you look at the fundamentals, if you go over to what is it?
Which one?
Microtrend. Oh no, I'm saying if you go to Microtrends and you just type in Domino's.
Oh, I can get it here. Look, I'm learning TradeView now.
Oh, you in trade? How do you learn in TradeView? Come on, man. You've been on TradeView.
I know, but I didn't know this little stuff right here was there. I get that quicker.
Are you showing or no?
Yeah, I am. Oh, you don't. Oh, I was showing screens the whole time.
Yeah.
When they were talking, I was showing the screens.
Oh, you was or you wasn't?
Yeah, I was. I went to each chart and charted them out.
I ain't see that part.
Okay, well, here you go.
Hold on, let me go there. Again.
I ain't see that part.
Oh, I gotta get that. Dang it, I forgot.
The net income year over year is up by like $1 million.
No, it's been going down. The growth.
Yeah, you're right. It was 100 before COVID.
Yeah.
It was 155. Fourth quarter 21, it was 155 million. It's at 117. You're right. Yeah, but that fourth quarter is a little suspect though, Brandon.
Yeah.
Because
I mean the sense, that's all.
I mean, unless we go all the way to the 449 million. 2020, we'd have to go back a little farther, but this right here,
100%. And you know why? Because of that, right?
Yeah, all the money they got from the federal.
Yep.
Yeah. So
like what Oba was talking about, all these PEs and all these, these forward guidances are going to be skewed and off, and they're going to be recorrected again. I mean, it's not time to jump into the actual stocks just yet. I know I was talking about it before on which stocks I might get.
Yeah.
That was me in the mind frame of looking at some stocks. And then again, I did jump into buying, I'm buying Google a little bit, I know it's way
Yeah, I
out of the
did.
money. Like Google at $100, I mean, you can't get any better, or can you?
Yeah, I did buy at the split, so
Yeah. So I mean, I'm not worried about it. What is it? Damn, it's $94 now. I I still don't care. I'm gonna get some more. So um, it's not
when they
even.
talk, go ahead.
No, I was gonna say it's not even back at 2000 and what's it? COVID started 2020.
Which one you talking about, Domino's or Google?
I'm sorry, Google.
Let me switch. Yeah, you didn't switch so far, little come to.
I'll
All
jump
right,
back.
let's get back on track.
That seemed to be maybe an unhealthy place, but I think it'll be somewhat in the middle. I mean, right now the inventory is far too few, but to go back to those days where it's just the discounts were so heavy, I don't know if we'll exactly get back there.
The new car dealers I talked to love this dynamic. Low inventory, high prices, lower employees. What's going to change this dynamic, and how essential is it for the Fed's fight against inflation?
Yes. So I think for car dealers, this has been a good time. They've got high margins. They're not having to sell as many vehicles. They're not having to just work on volumes, which is a really stressful business of trying to make your number at the end of the month and all of that goes with it. But I think moving forward, there's just not enough vehicles for consumers, and that is an issue because consumers are walking to a different brand. They're trying to figure out if another car is going to work for them because either they don't want to pay the higher prices or they don't want to wait, because that's a new thing too. Americans, we don't want to wait for our goods. We want them today, right now, and that is not happening either. So I think that this is probably not the system that is exactly ideal. So we probably are just going to have to keep, I would say, adding to the inventory, get it back to a normal level where it's not as if you're going to lose customers, because that really is a danger for auto companies as well as dealers, is they're just going to walk because someone else can offer them a car in 3 weeks and maybe at MSRP versus waiting 2 months and a few $1,000s over MSRP.
Jessica, how much of this is because of when we talk about the increase in cost here, how much of it is because of the supply chain aspect of it, the fact that suppliers are raising their costs, and therefore some of these automakers are being forced to pass that along to the consumer?
Yeah, I mean, there's probably a few dynamics going in. One is consumer driven. Over the years, people, especially in this country, we've wanted larger vehicles. We want more options. As a result, a lot of companies, especially Detroit companies, they shuttered their smaller car lines. So that has naturally driven the price of vehicles up. And then we hit this supply shortage, mostly led by the semiconductors, which has made inventory really scarce. And I think that is what really has propelled these prices that we see above MSRP or at MSRP. And it's a little more atypical than what we've seen in the past. This industry has never seen an issue where not having enough inventory is the problem. It's usually just sluggish consumer demand. That, of course, is not the case. But a part of these rising prices has been our own tastes. We like nice things. I think that's fairly typical of what we see when we look at cars around.
So what are some of the trends that you're seeing in the leasing versus buying decision making?
Right now, the leasing market has really taken a hit. People are not necessarily as interested in leasing. A lot of leasing relies to get those low monthly payments that you've seen, the $499, $399 a month. It relies on automaker incentives, either subsidizing the interest rate or the residual value. Automakers haven't had to do that right now because inventory is so tight and people will just buy them outright. So as a result, the leasing deals aren't really good for consumers out there. So they're not leasing. Even brands that are normally leased at such high rates, like luxuries like Audi or BMW, even those guys are not leasing very many vehicles because it just comes down to what just makes more sense. If you're going to pay such a high price, I'm just going to buy the vehicle.
Electric vehicles, stunning national average transaction of 61,955. Given gas prices are continually falling down and recessionary fears, what's likely to drive that supply back up, and what is the pricing action? Where are we headed with EVs?
Yeah, I mean, the biggest issue with EVs is that automakers can't make enough of them. I mean, there's virtually waiting lists for nearly every EV on the market. I mean, some EVs like the Ford F-150 Lightning are so popular, I don't even think you can get on the wait list right now. You have to wait till the next model year comes out. So the issue, I think, is really supply. Of course, having a transaction price over $60,000 is not going to be the end goal for a lot of automakers. That is out of reach for a lot of American consumers. So the goal is to bring down the price in terms of product, really. So introducing less expensive vehicles like we saw a few weeks ago at the Detroit Auto Show with the Chevy Equinox EV. That will be here. That's promised at $30,000. So I think for this market really to grow, the vehicles have to come down in cost, but it is a bit of a catch because the supply is so short, and it's going to be short because of some of the commodity issues that automakers are facing to build these vehicles.
Jessica, we did get news today. The Department of Transportation here approving the electric vehicle charging station plans for all 50 states. We know President Biden and his administration has been very ambitious in some of their EV goals. I guess, to what extent does this really move the needle?
It definitely does, because I think with EVs, it's sort of a chicken and egg. It's like, do people buy them first without charging, or should chargers built first and then people will buy them? So there always has been a lot of confusion. But what we know is that these two markets have to move in parallel. People are going to buy EVs at high rates. California, for instance, saying that they're banning ICE sales by 2035. These charging stations are going to happen. And Americans do buy cars on the notion that they are going to drive one day across the country, even if we never do. So having that national infrastructure of charging is extremely important for people to make EVs their sole vehicle. Because right now we see EVs as a second or third vehicle, but to make it that person's only vehicle, this is going to happen. So I think a lot of things have to happen in this market for people to feel comfortable, but infrastructure is obviously a very crucial one.
Certainly is. All right, Jessica Caldwell of Edmunds, thanks so much for joining us. Well, in the meantime, and take a look at shares of Ford. You say just under pressure today. Now the automaker announcing it will invest $700 million in a Kentucky truck plant and add 500 jobs. This is in an effort to support production of his 2023 model year F-Series Super Duty truck. Now, this is the first wholesale redesign of this truck since 2017. It also shows that even as Ford is investing and betting big on EVs, the automaker is still staying true to its roots with its trucks. I will be sitting down with Ford CEO Jim Farley, and you, of course, will be able to watch the interview tomorrow right here on Yahoo.
Looking forward to that, my friend. Ahead, new data shows home prices in Miami are still on fire.
Hey, peace, power, and profit, you guys who just joined me. You got Price in the building, Thunder in the building. What's up, y'all? What y'all got going on?
No, don't be shy, y'all. You better speak up.
Okay, back to the video. Let me know when y'all ready to talk.
My bad, I was on mute. What's up, Mo?
Hey, what's up?
Brandon, you got the money, man? Oh, you need a extension?
Bro, don't do that. Don't be starting shit, man. Come on,
Brandon, you need an extension, bro?
Nah, I don't need no extension, bro. I need my half of your money. Where's my money at?
Oh, man.
You over here starting stuff, bro. Don't do that.
Come on, man.
Come on now. You know you owe me a couple bucks.
Couple bucks.
Couple bucks. Come on now. Don't do me like that.
Friend. Hey, Mo.
Yes.
Share my screen, right? What you looking at?
Go ahead. You can share. Hold on.
All right. So this is a new thing, right? I just got it's like $35 a month.
What is it?
Tiblio. I never heard of it, but I said, you know what? Let me look at it. Let's just go.
Which one?
Tiblio.
Tiblio?
I'm finna show you. Hold on.
Okay. So while Thunder get ready, peace, power, and profit, everybody. Thanks for tuning in, Urban Economic Empowerment Show. Thunder getting ready to show us a new thing.
You see it?
Yep.
All right. So this is Tiblio, right? Tiblio. and this is it's an options. It's an options joint, right? So, I'm not into options. I don't have a clue. So I'm learning about this aspect. I've been just doing straight trading for years and years. So this aspect is new, but I decided to go ahead and utilize this tool in a way. And like I said, it's $35 a month, but shouldn't be no problem. So
Look, do me a favor, Thunder.
What?
See down there where it has the trader tool chain. Click that off and see if you can take that off the screen.
We got what now?
See to the left where it says right there. Click on that. Click your arrow. See if you can take it off. Scroll down. Take it off the screen.
Why?
Because that's your number.
Oh, wow. Yeah, they're good.
Good.
Yeah, if they want, they can have it.
Mm.
You're gonna need that username password, and you ain't getting that. But yeah. So, all right. So I was looking at. I just got it like yesterday.
Mm-hmm.
So I'm kind of looking at it as the morning watch list. Is it big enough?
Yep.
All right. Morning watch list, right? So we got the Googles, we got the AEM Metas, blah blah blah, right? So,
go to the flow. So basically, this is sharing the market flow, so you can see the orders coming in.
Yeah, most see this on. Okay, so what it is? All right. So these are tagged to certain screeners. So you got the PM down, whatever that is. Most active, top traders, Delta Impact, top premiums, large OI, etc. Right? So these are tagged to the most screeners.
Mm-hmm.
So most actives, earnings. Okay, TDOC was earnings today. Let me look at earnings.
Mm-hmm. Tesla, Walmart, Twitter.
Look at all that.
The after hours, everybody who got earnings. Right now.
So for people, it was you. You were talking about. I thought we looked at the earnings. No, it was Sonny,
mm-hmm.
and he made his play the other day off of the earnings of Apple, right?
Mm-hmm.
Right.
And
so this right here got
and
the
Snap.
Yeah, earnings of Snap. Yeah. Apple is Snap. What's the date? The 26th?
Yes.
Okay, yeah. So these were all the earnings for the day.
And this market, that's the after hours they're showing right there. That AMC is after hours. There's everybody who's doing.
Oh, okay, AMC. Okay.
Now, at some point now or tonight.
Right. So we got the Frontier Group, AmeriSafe, blah blah blah. All these Morningstar. I'm sure I've heard of a lot of these companies. O'Reilly. So a lot of
O'Reilly Auto Parts.
Coursera. Coursera, they online. It's there's like a online
free courses, education courses.
So Deutsche Bank.
Yeah.
Ford.
Ford got earnings today. They gonna lose. They make no money.
Will it pull up?
We could pull up on something else. Did they already have the call? I thought I just seen it. Hold on.
Can I just go back? Okay, good. So, I got a news feed. Oh.
Yep, go right there.
Got a news feed. So I'm looking at okay, now. All right. So what this is supposed to do is just kind of give you, I don't know, I guess making choosing your options easier. Oh, they got a dividend calendar for the people who in the dividends.
That's 100, baby, right there.
Look at that. and it actually tell you how much how much they're paying out. Right there. Oh yeah, that's cool. So yeah, I'm definitely gonna be utilizing the news feed. And this is up to date. This is an hour ago.
Right.
You see what I'm saying? 602, 628, 558. As tech stocks sell off, pre-market prep breaks down this sector rotation. So let's look at that because you be doing the pre-market stuff.
In the morning.
My strategy for the overnight session was simple: selling technology stocks and buying value stocks.
Yeah.
S&P lost 0.75%. That's what's called was traded Snap, right?
Sunny traded Snap.
Yeah. It lost 0.75%. That's pretty big.
Yeah.
All right. So the screeners. What you be doing? Puts and stuff, right? I know.
I do the naked calls and puts, but Brandon, do you do any spreads or
what you do, Brandon?
Nah, I'm learning about the Christmas tree thing.
Yeah.
Then, I'm getting back to the spreads.
Oh, so the Christmas tree is close to the butterfly, ain't it?
Yes, I think it's like so. The Christmas tree that was shown last time. I forgot the brother's name. It was 4 legs because you buy 2 cells.
Jermaine.
Yeah, Jermaine. You buy 2 cells for your main. I gotta show you what it means. Or if you want to, you can do a video after this, after Sonny gets done. Or not Sonny, but Thunder. But it's a target for where you want the actual price to stay in the middle. Then you buy a call, and then like think you sell a call, and that's 4 legs in itself. I think a butterfly is 2 more additional legs, so it's 6 legs in general altogether.
Oh,
so I'm looking at it right here, right? So
you got a secure put. Okay,
these are puts.
These are puts. So I'm looking at, they got the symbol, they got the expiration date to pick, they got the which one to pick, they got the strike price to get it at.
Market cap. That's the
market cap. What is that? DT.
I think
the inspiration. No. What is that?
I think you're right. No.
Yeah. That's the end. That would be the price that it was at the end of the. Click on that little right there. It should tell us something. Nope.
No.
What the arrow? Click on it. Click on the letters itself. Usually to tell you. I think that was the price at the end of the market, but
I'll look it up. But yeah, they got earnings.
So they got earnings coming up.
The Greeks. Yeah, so
oh, I'm sorry. It was a days of expiration.
Yeah.
Days of expiration. Oh, that's probably what it is. Right. 37 days. Right. Yeah. So this is December. So they're saying this is 37 days, right? And it's October 26th. Right. Okay, cool. Yep. Days of expiration. Is a max return percentage, and they got the max loss. You see what I'm saying? And then if you chose to do it, you just log it right there. You can log it, and then it'll keep up with it. So you got to cover calls, top gainers, top losers, and this is up to date. This is
real time.
Yeah, real time. I saw it today. I just looked at it this morning, and if you press refresh, it'd be like a minute. It's like a minute behind.
What about? I wonder if it shows the open interest and the volume.
Let's see.
I wonder if you could customize. Probably not.
Let me see. You said open interest.
Go to the flow. Go to the order flow. Go up a little bit.
Yeah, we didn't get this girl from.
Oh, and then what you talking about? Butterflies, right?
Yeah, top
Let's see what
butterfly.
Brandon talking about. All right, so
see how they did a Wait a minute. Okay, see on the right where the PC1. I wish you could move the columns over. So they did. Oh man, we can't see the ticker. Yeah, see if you can move the column over to the left. But you can see it still. Keep it right there. So let's do Facebook. So Facebook, Meta. Go up to the top one.
He's a Meta, right? Oh, this one.
Yeah. So they did one call and 2 puts. That's the butterfly. So they did a call.
Where you see that at?
The PC1 to the right. Right. Look right there. Look up. Right there. So so they did a call with a strike price 130, and then they did 2 puts. They did all the same expiration date with 2 puts with a strike price of 124 and 115.
Where that's at?
It's okay. Go to the left. No. Go back. Brandon. Hold on.
Oh.
I'm gonna show you what it looks like on a
Brandon, I see you saying 130 and then 124 and 115.
Yeah.
Okay, I see.
Expiration. Right. So to show you how much they would have paid for it, we'd have to pull it up and put it in something to show the amount, how much they paid for it. Go to the right, move it over. Can you move it over so we can see what else is over there?
At the expiration date.
Yeah, they kept the same expiration date. But we don't see.
Oh, they go to call. Okay. So what did it say? So what did it mean?
So it's got 3 legs to it. It's got looks like it's 2 legs.
They did 6, huh?
A call.
Oh, I see what you're saying now. So they're saying do a call for 130.
No, that's your strike price. That's the price.
They got one for 130.
130 right there.
Yeah.
A call at 130, right?
Yes.
Right. And then a call at 145.
Right.
Then a call at 160. Yeah. Right. Okay, I see what you're saying.
And 2 puts. They did the puts and 3 puts.
They got 2.
9.
What the puts? 124, 125, and 126.
And then there's another one right up underneath it.
Where we at, Meta?
Yep.
I put at 115. Oh, they got an expiration date to saying 115, 120, and 130.
Right.
Brandon, this makes sense to you.
Is it the same strike price? Or is it the same day? This makes sense right here? Everything? What I'm saying?
The first set is with the expiration date of the 26th. The second 2 sets is expiration to 28.
Mm-hmm.
Oh, did I say that wrong? No, they purchased them today. I'm sorry. They purchased them today with all the expiration dates at the 28th. So Friday. So all of these expire Friday. They did 9.
Yeah, 28, 28, and 28. Yep. Okay. And these are the top butterfly. Can you? Oh, so you saying look up Meta and see? So what I'm gonna do? I'm gonna look up bar chart, right?
Yeah, you go to bar chart. Yeah, if you want to see how much it paid, how much they possibly paid, because it probably changed by now.
No, I want to see.
How much?
Bar chart.
They will profit. So with the butterfly or the Christmas tree that we were talking about, I don't have that level of trading. Jermaine did. So when he brought it up on his screen for us, we could see how much he paid, how much he would have paid for all 9 of those legs, and how much he would profit if it hit those certain. If it would have showed.
Oh, okay, I see what you're saying.
What price range the price action had to be in order for him to gain a certain profit.
Mm-hmm.
You're not going to see that on here.
Well, no, then they have max return. Oh no, it don't.
I don't see it. Stroll to the left. We'd have to.
No, it don't.
Let me see if I can bring up my my Tastyworks. That's why I love Tastyworks. It gives you a good example of
Tastyworks. Yeah, it's all the chain.
Yeah, like
it'll show man. You ever watch the show?
Who?
You ever watch that show?
Yeah. Tom Sazanoff and what's his name? Batista.
That's serious, man. They ain't playing no games.
Yeah.
You want to pull up? I mean, you want to stop sharing?
Don't
let me
lose the
see that.
screen because you're gonna have to give him the strike prices. Brandon, wait till he log in and then you keep yours up so you can be able to. I don't know. You got 2 monitors?
Do I? Yeah, I mean, no, I got 1 monitor, but I can put up another thing. Yeah. But how would I do it though? I can't share 2, can I?
Yeah, you're gonna have to minimize your Zoom, and you no, don't share it. Just minimize your Zoom so you can see it. So when Brandon starts sharing, you can call out the strike prices in the call or put.
Okay, so stop sharing.
Yeah, stop sharing.
All right.
And then Brandon.
Yeah, I got it. Yeah, when I see it, yeah, I got you.
Yeah, give me 1 second. My laptop is.
What's up, Price? He in the cut.
Mm-hmm. So yeah, I'm gonna check this out. It's got a lot of good reviews and stuff like that. I ain't seen nobody had a bad review about it yet. So I'd say, you know what?
Do they have educational videos on there?
It got yeah, ebook. Let me see.
What's up, Price?
We got ebook. I see the ebook. Let me see the YouTube. Yeah, it goes straight to YouTube. Yeah, Tiblio. It's a YouTube channel.
Okay.
Option trading strategies.
I may play them in the morning. Let me see if I can find them. Spell it out again.
Hey, what's going on, family?
TIBLIO. What's up, man?
Hey, what's going on, man?
What you got on your mind? I know you got something.
No, I'm just sitting here. I got my notepad out and just jotting stuff. I do got a question about this Tiblio. Hey, Thunder, does it give can you get a put the call ratio on there? Does it give you a total of them?
That's what he's trying.
Total of what?
Put the call ratio.
Yeah, does it?
I don't know what that means.
Oh, I know we know what it look like when you bring the screen up again. How you spell it again?
TIBLIO.
TIBILO.
No, TIBLIO.
TIBLIO. Yeah. Yep, it has a tutorial. Or play it in the morning.
If you're an investor. Oh, did what you're looking for right here. Hold on, let me share this. Did what you're looking for, Mo.
Let me see.
Did what you're looking for right here. So you said the position, right?
Open interest. Open interest, volume. Keep going. It should give the call to put ratio too. Somewhere probably on the bottom. Oh, you know what? No, we probably would have to click on that ticker because you got multiple. See, can you click on the ticker? Yeah. Mm-hmm. Nope, you can't. You can't click on it. Double click on it.
Nope.
It's probably it's probably a way to bring it up one by one.
Yeah, I just got to go through it. This is my first time. Can't even look at this thing, but that's a lot of open interest right there. To me, I'm just looking at that right there and see what everybody. That's a lot right there.
Who that?
NOK. Is that Nokia?
That's a car, electric car, ain't it? That's Leap. That's Leap options. That's why. Go to it right there. That's
Nokia.
That's Leap options. Change your expiration date. Come down. I got it.
For me?
Yeah, go back to bar chart.
Oh.
Change your expiration date.
To what?
January 23.
Oh, that's what it was?
20. Mm-hmm.
Let me see.
And then stroll.
Looking at? Yeah, 20th. Yeah.
Stroll down.
Look at that.
That $4. How much the price is at right now?
Okay, it won't. It's looking at.
Oh, $7. Seven strike price.
$4. Okay, $7.
Yeah.
And it's currently at $443.
Let's go to the $61 for a Leap option.
Oh, there it is right there.
Yeah, that's the $7
finna go. Oh, so let me
look. If it's only at $4, I'm buying in the money. What you talking?
Yeah.
Why? That ain't much. Keep going down.
Yeah, ain't much.
Let's look at the open. Let's look at the ratio. Scroll down all the way down.
All the way down.
What y'all said? This is Nokia?
Yeah.
Nokia.
God damn. Let's go look at the company on Yahoo Finance. What's going on? Let's see some news.
Like for real.
Look, the EV that picked up or something?
I don't know.
Yeah, they probably supplying the batteries for somebody.
Yeah. That's all they were talking about this morning. Some vehicles.
Yeah, I heard them.
Vehicles.
And what's it called? Trying to make something happen.
Oh, they repurchased their own.
Oh, there we go. That's it. Okay.
So
Oh, really?
So what is that? What is that? Oh, they repurchased some yesterday too. So Price, because you and Brandon, maybe even Thunder, when they pre-purchase their own shares, what does that do to the company? Like, talk to us. What are we looking at?
Oh, so they did.
When they do a buyback?
Yeah.
I mean, it makes the price of the price go up.
They've been doing it all week.
Let me put them on.
They're doing this all week.
Yeah, I mean, that's what a lot of the companies.
Go ahead.
When they, I mean, that's just a tactic that a lot of them been doing is buybacks, doing this whole inflation and rate hikes thing, is to keep their books.
Yeah, because they have no.
I can't think of the term.
Yeah.
Yeah, I think it's just an accounting thing. It makes it look strong, but you really have to dig in the weeds and see if they really got problems.
Yeah, go to the financials. You can go to macro trends. Oh, is it on there? It's on Yahoo. That's never mind. It's on Yahoo.
What you want me to go to?
Go to the financial pick. Go back up. Go to the financial statement. Go right there. Oh, yep, financials. And then scroll down. So revenue. Income, net income. Don't look like you lost no money. That's what we looking for.
Yeah, I think
Is that revenue?
Yeah.
Get that revenue more.
Yeah, I'm trying. Thunder, put that back. Go ahead. Do you think? Go ahead.
No, what's up?
We say, Brent. Yeah, I'm looking at the total revenue. It
I was gonna say.
Look like it's up though.
I mean, it's fluctuating. It's fluctuating, but it's right there.
I see it on micro.
21 to 23 million.
I was gonna say, does that have effect with buying back the purchases when it comes to their revenue?
Oh,
on that side,
keeping it where it's at on their buybacks. Okay, now I had to watch that in the morning and put it on the list.
Oh, hold on. Look at their gross profit though. They $1 million up.
They just bought all week though.
Yeah, it's probably why they bought all week, because they got the money to buy.
Mm-hmm. Go to. Did they already have earnings? Go up. What happened?
Didn't they have an earnings day? Oh, maybe they did. Earnings. I don't know. They got news. Nope. Let's see. Earnings date, yeah, NA. I mean, I don't know. Maybe I'm missing something. I mean, they all over the place. They ain't went nowhere. Actually, they down, so I don't know. But either way, they're saying that something about to happen, so you can't have that much open interest. It ain't nothing gonna happen. They are bullish. They are clearly bullish. on these boys.
What Nokia? This the guys that do the cameras and what else they do?
No, you know they do the phones and the batteries and stuff.
Okay.
Mm-hmm. They clearly bullish.
Man.
Anyway, let's do it. Top trades. What's up?
Yeah, so stroll to right again. Oh, what you looking for? I was gonna see if you still no, not that one. You still on Nokia? I was gonna see if your other thing had the ratio, but we've already saw it. Never mind. I was trying to figure out the news. Oh, we seen the buybacks, but what else could possibly be driving that open interest? On
can we search for?
Yeah, do Brandon or Price? Do y'all see anything? Or that just doesn't stand out to you?
I'm looking right now, and all I'm seeing is something about G. I mean, it was in Forbes a day ago. Something about them leaving China.
Your phone keep going in and out.
About
right?
back 26 million. What is it?
Say it one more time, Price. Oh, let's see. Yeah, NBC. Oh, the gross margin is where it needs to be. Oh, wait. Optical transport. Trying to bring it back to scale scrutiny. Okay.
Okay. I mean, that's we got a China sale. I mean, China joint.
I mean, like
something about.
I'll go ahead.
I see something about a patent fight.
You got a patent fight?
Yeah, with Ericsson, I believe. Ericsson and Nokia. Metaverse and cell phones, and then something about 6G. I mean, I don't see nothing that
talked a lot about cell phones today.
I don't know, but I'm glad that screener said something. Let me look. What I was looking at was the top game.
Look at that. Yeah, that's penny stock, ain't it? For you, less than $10.
Says Nokia wins a contract delivering optical transport technology.
For the Fed?
No. Hey, Thunder, do me a favor. Type in Koi Fin. I don't know if you're able to get it.
What's that?
Type in Koi, Koi Fin, FIN. If y'all not able to get it, I'm gonna see if I can drop it in the back chat. Now, this is the same some of the site that you have, but it's free. It doesn't have like the options and everything on it, but I use this one to find like good market data. Type in Nokia right there at the top.
Where did you fired?
Why am I fired? And then scroll down a little bit. You're gonna see news right there.
I ain't never know about
this. What I'm looking for.
Hold up. No, yeah, I think you gotta
log in.
You gotta sign up. Yeah, you gotta sign up. You sign up for free. But it says Nokia wins contract to deliver optical transport technology for Chinese state grid, and that was 4 a.m. this morning.
Yeah, that's what I just looked up.
Was that it?
Yeah, I was just looking at
Yeah. Okay.
What was it again?
Optical transport selected by State Grid Corporation of China, bringing massive scale security and agility to the nation's power grid. So yeah.
So that's a potential future, And that $4 is not bad. So, and then you guys see what leap options on that?
Yeah, for January, and it's up. The open interest is 900,000 to 90 something thousand.
I think that's the play right now. I think everybody is
Leap.
like
ain't no thing. You see it right there. It's the largest. It's the largest one. The largest open interest.
But that's the thing though, can they come through with that? Because China is still in, somewhat of a down
It don't
state.
even matter if they get the $5, $6, we still making money.
I thought they said to get the 15 cent.
15 cent, you still making a bag.
Still making something. Ford got some good. Look at Ford, 194. Let me look at Ford.
Well, yeah, I could tell you that because remember I got the Ford Leap last year for 2022 and 2023. I would have thought they would have sold off by now, but I guess all this hype about EV is really boosting them up.
Oh,
they on the uptick.
Yeah, call.
Say it again, price.
I mean, Ford was on the up. I was looking at them yesterday. I mean, they had a little moving. And
go ahead.
And I'm just that F-150 is supposed to be hot. It's just that they can't get all the parts in to finish the vehicles. They got inventory issues.
I figured they were gonna drop. Something was gonna happen by end of the year, being a holiday, something, because I was like, wow, that open interest ain't no joke unless everybody just gonna lose all their money.
194. So they got a call at $20 for November, January the 20th.
They got 20, 25, and 30.
You saw that? What is that?
Yeah, go on your thing. Look down. Look, 20.
Oh, okay. Yep.
25 and 30.
So they said, yeah, it's
strike price.
Clearly bullish. They clearly.
You gotta add some more strike prices if you want to see them. Go back up. Go back up, and then go right here where it says near the money, I think. Yep, and you could do 20. And then scroll down. Now you can see more.
Okay, yeah.
There you go. 20, 25, and 30.
And 30. Yep.
And that 20 is the, yep.
So they clearly.
Ford plays between, so they gotta have something they gotta have a catalyst because Ford plays between that $11, $10, and $12 right now. So they have to have some kind of catalyst in order for them to be hopping on this bandwagon. Because I played it last year for the $12 strike price, and it went, it was at I think $5 or $7 or something like that. Did pretty good.
They got $15. 15 right behind.
Yeah, only $44.
What you mean 44? What you talking?
Oh, the bid. You see the bid? That's how much you would pay that contract right now. Yep, bid. Yeah. See strike price.
Oh, bid. Okay.
Yeah.
That's how much it costs?
Yeah. For one contract.
So you saying that $5 for this contract?
Yeah. Yes.
I want to go and do that now. What you think?
Oh, I already got one. I told you.
No, I'm saying I just opened. So
even I look at it like this, for $5, even if you didn't win, you only lost $5.
I don't even care about it.
Yeah. You have your risk factor. They're saying,
right. It's only $5.
Management is $5.
$5, man. I got I just opened up a Robinhood.
Go to the chart, but go to Robinhood. You gonna trade on Robinhood? You should have did a Webull or Thinkorswim.
I did that for my little boy.
Get him, Mo.
No, you should have put him on Robinhood. You get better. He gets better options and not options like what we were talking about, but he gets better analytics on.
Of course, no. He down. Okay, so his school they was marketing, right? They did some little campaign or whatever for Robinhood, so he signed up. This was last Friday. So I ain't, you're 18. I ain't got what you doing? You ain't got no business doing this market stuff. So he told me he was doing it. So I said, you know what? I'm gonna give him $100 and just let him have fun.
And Robinhood got RSI on it, not Thunder, MACD, and
I saw it, yeah.
Moving averages.
So time I signed up, it bought all the those updates and stuff on there. I said, okay, cool. I mean, that's better than nothing. Because before it had nothing. I never even thought about no Robinhood. So I just put $70 in there, and I was just showing them how to. I think I lost maybe $1, but I was just showing them how to buy and sell stuff. So anyway, so yeah, I think that'd be pretty cool, man. $5. I said, man, you know, I just tell them, man, hey, just get that right there. But so this is my point. So all right, so you saying that's how we need to use? What you think you think we need to use it like that, Mo?
What?
We need to use this right here for
this elite. This projected out.
Oh, there it is right there. No, that's a Delta.
That's pre-earnings. But what I'm looking at, like we just did with Nokia, we went to the so we identified on a particular platform, right? Mm-hmm. Then we just didn't make a rational decision. We actually went and looked to see what was going on with the company. Looked at the fundamentals, look at the news. Only thing we didn't pull up yet is the chart.
The Nokia chart? Okay, let's do that.
We don't trade view.
I'm trying to.
Oh, where you normally pull it up?
Keep saying shit. I'm trying to.
I know. Brandon or Price, y'all have anything else y'all would do? I'm
gonna do it. Let me log in though.
For the audience, we're not teaching you to trade. We're not financial advisors. We're just sharing educational information. So we're just showing you guys on. Thunder brought up a screener, and when we identified a potential play, we actually looked at the fundamentals, Microtrend, Yahoo Finance. We looked at the news, and now we're looking at the chart. Because in the mornings, that's what I've been doing. I'm playing videos on fundamentals, the financials. I'm playing them on the charts, beginner stuff, so that people could start getting this stuff in their psyche. So when on Wednesdays, when we start doing this, people should be able to follow. I've been doing this for the last 3 weeks.
Yeah, you gotta lose patience. Mo, I'm gonna be truthful with you, man. I think y'all asked me why I wasn't logging. I just ain't got the patience. So yeah, I'm glad you started to lose your patience. Yeah, we gotta start to you gotta take the diapers off, man, at some point. But yeah, so here go Nokia right here. And I see it's kind of chilling. I don't see nothing going on. So I don't know.
Clear Price?
No, I'm just saying the weekly looked good. I mean, it came back and rested above this 429 zone.
Go to the weekly.
It's chilling. It just ain't nothing to talk about.
Yeah, I'm with Thunder. I mean, he's right.
But y'all know me. I don't have the same.
I know
we different. We different for us.
You doing RSI? It's chilling at the what? Ford? What's that? The Ford?
Yeah, it ain't nothing to talk about. This ain't nothing. Okay, so let me tell you about this one right here. So this is the one where my former boss, he told me to kind of look at too.
What's that?
I want to talk about the RSI because he talking about the RSI, and I think his hedge fund manager told him about this one right here, this histo alert. So what he's saying is, okay, you got these two lines. I wonder if can I make them bigger? Let me see. All right, yeah, let me do that. So you got these two lines, right? You got the red and the green. He's saying when they get above that red line, that's a signal to buy.
Mm-hmm.
And then when they get it below that green line, that's a signal to sell. So I see what he's saying. As far as, I mean, you just look at it. It's definitely correlating. He's saying it's chilling here, it's chilling. Don't buy. Then boom, buy. And you see it's going up. Buy. Then when it drops below that, sell.
Got your same concept if you look at your RSI on the bottom.
Yeah. It's just something.
Yeah.
Somebody asked me about what was a signal to buy. You remember that about a month ago? Somebody asked me what.
Right.
Yeah. So I was asking him, and he said, "Well, shoot, just try this one right here. It's just something you could tell him." And of course, it ain't 100%, but it's pretty cool, I guess. When to get in, when to get out. But anyway, yeah. So it ain't nothing on the chart that said anything. But for, like you say, for $5, I mean, I don't even care.
Yeah. But I mean, you can look at it on the daily. It's right there at the 20. And like it closed above the 20 EMA.
Put it on the daily at the top. Yeah, go up, Thunder, up near the wording. Yeah, go to the left. Up. You see the 1 minute?
Oh.
One right there. Put it on 1 day. Okay, right there.
Oh, let me go put my email.
Oh, they got earnings coming up. No, they already had earnings?
They already had earnings on the 22nd.
Yeah.
Oh, okay.
What my EMA? What I do? Indicator? No, it's over there. Indicator. What I want.
You already using everything.
I want EMA on it.
Mm-hmm.
Yeah. I would personally, I wouldn't be impressed until at least take out this local high. Well, really, back on the 12 September, like $5, because it could sit here and squeeze between this 20 and 55 right now. Just looking at it.
EMA.
You said 20 what?
The 20 EMA and the 50 on the daily. I mean, they both right there, which is,
trending price.
It could sit here and just range and squeeze. I don't know. But the daily is trending green. It's not going, I mean, it's not going to go back down. So, it may be something going on.
13, what it is, what I'm looking for?
What you doing?
Oh, the 20.
For the EMA.
Go back. Oh, cool. Yeah, you just put it up. Look. Look up.
Oh, there it is.
Yeah.
How I change the thing, though?
Look, go right here where the $3.67 on the left, underneath the word Nokia. Click right there where there's the number 2.
Number 2.
Right up underneath 367. Right there.
There we go.
Now hover over it so you can, not the volume.
What I want? The wrong one. Input?
No, you click the. Oh yeah, that's right.
I don't want that one.
Close out.
EMA. That's what I want.
Yeah, right there. Right there.
There we go. What is it? 13 and 48, ain't it?
Yeah.
Well,
come down one.
No.
You on a different one. I don't think that's the one you want.
That ain't the one I want. What I want? What do you want? That was the MACD? That wasn't the MACD. You got it.
It's the EMA. Is just not that choice.
You can do moving average exponential. That's what
yeah, but that one
you can do.
Close that out. Close out the one on your screen so you can select another one. That close it. Close out of that. Go back to this and hit the X.
Okay.
Now go back. Now you can tell them price.
Yeah, moving average exponential. Do y'all do just regular MAs or y'all use the EMAs?
I have both of them, but that one, use that one. Use that one, Thunder. Right here, come down.
Oh.
No, go back.
Okay.
I use them interchangeably price. Go back to that EMA again. You see where it had all the numbers? Yeah, come down where it said the 20, 40, 20, 50, 100, and then just change them out.
All right.
Yeah, now
there we go. That's the one I want.
Yeah, but you got to change your numbers now.
I know, yeah. That's the one. That should blow.
Now hit visibility.
Oh, yeah.
Yep, not change your numbers.
Where?
Why this one show like this?
No, this ain't it.
Ain't it either. Close that out. Oh, what's wrong with your EMA chart?
No, it's just a moving average exponential.
That was the first option that came up. Click on it.
Really?
Mm-hmm. Watch.
I can hardly see what he's looking at.
Right there.
Let me see.
Go back up. Moving average exponential.
Right. Okay. That's it.
Try that.
Okay. I'm gonna.
Okay. Now, if you hit your little call, go right there to your inputs.
It is it?
Yes.
Oh no.
No, that's 200, right?
Look, let me
see. No. Get rid of that. Yeah.
Yeah, I don't
Start again. Just change it. Go back to the gear.
Go back to what?
Go back to moving average exponential. And then click it twice. Click my fault.
Click what this?
No, go back to indicators and type it again. Yep.
What?
Oh, backspace. And then moving average exponential, type it again. Oh, click it, I'm sorry.
Oh, you saying do 2?
Yeah, do 2 of them.
Oh. Oh, let me get rid of I'll get rid of that one. Okay. Do it again.
Oh, you already got it, don't you?
Yeah,
you already got it
said
saved in your favorite. No,
Yeah.
I'm saying go to your favorites. Yeah, you got it right there. Oh no, that was something else.
That's the MACD.
Okay.
I'm gonna look at mine and see what it looks like.
It seemed like it. I think it was the one that Mo was saying, but it don't.
Are you looking for MA or
the one that Sonny be using with that 1348?
Oh no, he got to type those. You got to type those in.
I know, but to which one?
So okay, you can close that. Go to your first MA.
Which one? That one?
No, close out this screen. All right, then go to your MA and then go to the gear. Length, type 14. Go to style. Pick a color. You want blue or you can change it. Something that you can see. There you go. Hit OK. And then the second EMA.
So bring up another EMA.
Right. Yeah.
You already got it. I thought you had 2.
I did. I canceled that one. All right.
Oh.
Okay.
And then what was the second EMA, Sonny's? What was it, like 38 or 48?
48. He do 13 to 48 is what he does.
Okay. Change a different color.
I'm getting ready to transition from my office to home, so if y'all don't hear me, I'm driving.
All right.
So yeah, we basically looking at the same thing now.
Okay.
Well, you got a 40, I got like a 50. But and then when you got your 13, I got a 20. But I just see it like coming through there. I wouldn't be impressed until at least break that pink line of yours. You know.
Back
to me, that would be a break.
Downside?
On the upside.
Okay.
I mean, if I'm trying to be bullish, I mean, because it looked like it's trying to do some type of retrace back to that local high. But it's gonna squeeze, in my opinion, where that pink line is. See how that pink line coming right across that peak? I mean, if it runs, it's gonna take that out and go on to the next one.
This is chilling, man. I mean, it's nothing here. I don't know. So
that's what I'm saying.
It's got to be news based. So I don't know.
Go to the 5 minute.
You know they're saying, hey, buy the rumor, sell the news.
Right.
Yeah. Yep, that's exactly right.
Go to the 5 day. Not 5 day, because
5 day.
Yeah.
For the week. That's a good point. Either 3 or 5 days.
And then that little refresh. You don't have to go all the way back. Once you hit 5 day, it'll just adjust it for 5 days. Unless you're gonna plot your support and resistance.
What you want me to do?
So refresh it where your MACD is. No, not up top, but at the bottom.
At the bottom.
Hold on. Let me see if I can annotate.
Put it towards the middle and the bottom, and you'll see it kind of pops up. Go up a little bit right there. Go up, right there. Hit the refresh to the right.
Right there. Yep. There you go. And then scroll out a little bit.
Scroll down.
Or scroll out. There you go. There you go. Right there. So from there, you can plot your support and resistance points off of 5 days.
How you do that?
So go to the little. Let me see if I can annotate for you.
Over here.
Yeah.
Yeah, come on, draw the thing, Brandon. You know, like you did last time, man. Quit holding out.
Oh man, I'm just waiting for my money, bro. Go right there.
Trend line.
Yeah, go trend line. Oh no, click on that little arrow on the trend line.
The arrow on the trend line.
Yep, go to horizontal line.
Oh man, I don't like this 5-day.
Now go to the peak.
To the peak, yeah.
Yep. Right, huh? And then what I like to do is from there I scroll all the way in. So if you click it again to get this line.
You saying boom and boom?
Yep.
Now what?
Click it again.
We got the boom and the boom.
Hold up. Yeah. Click that again. And hit it at the bottom.
Trend line, horizontal line. We got the boom, and we got the boom.
No, you already got it
twice. I gotta do it twice.
Yeah.
I guess. I don't know.
All right. Now you got a base for 5 days. So what you can do from here is you can always scroll in. So if you scroll in, click on 5 day. Scroll out a little bit till you can see that top. Okay. So again, apply your support and resistance.
How?
Same way you did the other ones.
Yeah. The next
yeah, there. So you got one here, one here, one here, one here, here. See, so you don't have to do it again for this one because it's already touching. You got one here.
Yeah.
You already got that one.
Yeah, it got to come back and confirm that line. That line you just drew, I think it got to come back and confirm that because it broke out. It never came back and touched it.
Yep. Oh, you mean to the downside?
Yeah. Yep. That line that he just drew, and then he put one on top of that, so you can mess around it. I think it arranged there for however long. I don't know how fast it's moving.
Right.
But, y'all see what I'm saying?
Yeah.
Because it had a nice little breakout from the spring, and it did its thing and was pinned down for a minute, then it broke out. And then it took off and then peaked out a little bit. Yeah, I don't see it taking off just yet. And now it look like it's pinned. What's that pink line? The 48? It like it's pinned up under there.
And then there's another key factor.
No, ain't nothing here, man. I wouldn't even. Yeah, this is. I don't know, but it's got to be future news that has this doing this. So
I think it's gonna capitulate.
That he can
right. See,
Now he can hit this all day.
Exactly.
Bounce right back up, or it can just break through, fall. Now,
that's if it's extremely.
I'm sorry. Go ahead.
No, you go ahead, good brother. I'm sorry.
I was gonna say you got one more key thing here that can help you indicate or give you like indication on it potentially falling back down. Now I'm gonna ask you, Thunder, what that is.
I don't.
You know what it is? Yeah.
No,
yeah.
You know what it is, bro. Go back. Go back in.
Your favorite three. What's your favorite 3 letters?
Nah.
You got the RSI to help you out. Or without using the RSI, what looks inorganic?
I don't. Yeah, I don't. This is.
Come on, man. Think. You got to think. Like what here looks inorganic for a stock to grow.
The only thing you're looking at the EMA, maybe.
No. You're not looking at any indicators. If you're looking at the stock by itself, what looks inorganic? What looks like it don't belong? What looks like it broken a flow? Like something broke a flow. We'll give you a hint.
Yeah.
Since when does one single trader or a hedge fund do that? Well, hedge funds do that, but you think that's organic?
I say you think it pump and dump. That's what I'm saying. What was the
right?
What was the catalyst?
No, go back.
No, you were just there. That blue line. Yeah.
It depends though. I mean,
that's inorganic.
Yeah, but it may be news based.
Yeah,
Exactly.
That's what I'm saying. But what was the catalyst? And that's why I say you got to come back and confirm that
you
breakout.
did say they had earnings a few days ago, right?
Yeah, the 22nd.
The 22nd.
That's like back. Yeah, that's
well,
back in
there
the
we
summer.
go then. So
No.
maybe they had a strong earnings because from the 22nd to now is on the uptrend.
Now go back to the earnings tab at the bottom. Or scroll back like you did before.
What you mean?
Yeah, keep going. Stop right there. You said they had a strong earnings, right?
I don't know.
Earning. No, they did. They had a positive earnings because they look. This is showing a strong earnings, and that's from here on back.
Oh, okay, I see. Okay,
that's from here on back.
Mm-hmm.
So, what you're playing for now potentially is for the future.
The China deal.
That was back in the spring.
Yeah, the date.
What spring? What you talking about?
What, that earnings?
That very bottom.
At the 22nd.
Oh, that's the 5 day.
Is it a 5 day?
Yeah.
I thought you were doing everything on the 5 day. Oh, my bad.
No, he was still on the 5 day, like frame, but he was just moving it around.
Oh, okay. When you zoom in,
right? Because I like to see it like that, like day by day by day.
So they go your earnings right there.
Right.
The 20, 30, Thursday the 20.
Now, what's crazy about this is if you look back, was at the, let me show you the way. That was the 20th. If you go back, look at that chart from the 20th back.
20th back?
Yeah.
Roller coaster.
Right.
Yeah, it ain't nothing.
Was it really? You just read something that they did.
Yeah, they got that China deal.
Nah, before that, what was our first initial thesis on it? What did they buy back?
Stock dividends. Back. Yeah.
Yep.
When is that? Is that back in the fall?
No, that was last week. No, that was this week.
All this week. No, it was more than one time though.
No, it was 3 or 4 times this week.
Okay. Yeah, I think they were trying to sustain.
They bought back in the 21st. They bought back.
Yeah. Every day.
They bought back the 20th of October.
Every day. From the 20th all the way up to right now. News. Oh no. Oh, look here.
Dig in. See 4 hours.
Not financial. Was it news?
Yeah, you just click.
I had just Google News.
I'm sorry, yeah.
Go to summary? Not summary.
All the way to the bottom. All the way to the bottom.
There we go. Right there. So you got the 26th, the 25th, the 24th, the 21st, the 20th. So they've been buying back since. Oh, here we go. Q3 earnings match estimates, revenues rise. There we go. So that's why they're saying go ahead and try to lock in that $5 contract. I mean, them contracts. Yeah. Yeah.
Read the next article down though.
Huh?
These contracts y'all talking about, these are puts or calls?
Hold on, let's see.
I think the long term, I think it was put calls.
You calls at $7. Calls at $7.
Go to bar chart. You got to change it though. Yeah.
They got the call for $7. Is that 440 something right now? Right. What I want. That's calls, yeah. No.
Was it leaps or was it just
120? 120. There she blows. So they got I mean, it's clearly bullish, man. Everything. $5, $7, and $10.
Hey, but what's how far out of those contracts?
It's 120.
We talking about like 120 days?
No, 120. January the 20th.
Okay. Oh, okay. Well, you got time for that to happen. But I think in the near term, can you go back to your chart, Brother Thunder? And can you pull up your RSI?
I got to get rid of which one I'm gonna get rid of.
You can throw the volume out. We not paying attention. I just wanted to get y'all thoughts.
So the 14 EMA at top.
Oh, there it is.
Yeah.
Why I can't do that?
You should be just exit off. No.
I ain't got number 2.
Oh, you good now then?
No, I just
get rid of 14. Which one was pink? Yeah, get rid of 14.
Let me try one more time, bro. That's just stupid. Do they want the regular one? Yeah, that's stupid, man.
Yeah, just a regular one.
That's stupid.
It won't even take long.
Yeah, that's stupid. Oh, it got 2 of them down here.
Oh, you okay? Why. You probably already had one on.
I already had one. Okay, I was about
That's okay.
Let me add that. What EMA was what? What that was? It was
14. Or was it 14 or 13?
13.
13. Moving average exponential.
EMA, that's a 9. I wanted to get it to 13.
Blue
with the style. Big boy. Okay. All right. Here we go.
So now we go back to your days. Can you just start? What? That's the 5-day, right?
5.
Oh, click on it.
Yeah.
Yeah, that's a 5-day right there.
Okay. And let's just start walking in. Let's go to a 4-hour. So I use just the regular RSI with the lines on it, but I mean we still should be able to see the same thing.
What you want? You want the regular? Okay. No, this is my buy and sell, but I understand what you're saying. So let's do.
Try to. Are we going in or are we going out?
I was just gonna go in on the intraday because to me it's gonna flatten out right here where it's at, and I think it's going down. And then I got
You can try like the 1 day and see what it does on the 1 day, and then walking in from the 1 day.
Yeah, that's the one, Mr. Thunder. See how it now we pent up under the signal line.
What you said, 1 day, right?
Yeah. So today, basically. See, it's trying to fight to get back there.
And then if you go to the 4-hour.
To the 4-hour?
Yeah, we just drilling. Yeah, drilling.
You want the 1 day or the 5-day?
Well, no.
We just
you good.
Yeah. Okay, you good where you at? I'm just saying we changing the time period.
All right, what you want? 1 hour?
4-hour.
4 hour.
Now look at it now.
See, it's curling over.
It's trying to fight.
Yeah. And I guarantee you, if we kept drilling on down 1 hour, 30 minutes, I think it's going to go down before it goes up.
And you notice how you put those support and resistance lines and how the candles right there in the middle are just
look at that range
back and forth.
Mm-hmm. Exactly. Look at that range, squeezing.
Scroll in. There you go. And just move it over. So Sonny, my fault. Thunder. So after seeing this, what do you think is the possibility for the stock to go?
Bro, I'm going up. Yeah, if that much open interest ain't wrong, bro.
Now remind you, this open interest ain't for tomorrow. This open interest is for next
Yeah,
year.
but I'm talking about long term. If you're talking
Oh,
about
he talking about a long play.
like
Yeah.
for Price.
Oh, yeah.
Mr. Price, yeah, he the investor. I'm not an investor. I'm a trader. So for him, yeah, he need to jump on this ASAP. Long term.
But
yeah, that's a long.
It ain't nothing.
For you,
it ain't nothing. The chart gonna tell you to do that, at all. I mean, just with the EMA, it ain't nothing. I mean, it's still under EMA, so I wouldn't even just based off of that. I wouldn't touch it. But I don't know, man. That's how news work, bro.
So how would you do a put on this?
A put?
Yeah, because I already told you, I think it needs to come back to that line, whatever, not your very last line. I think it needs to come back. But I'd be looking for, if I was to buy puts.
For one day.
Puts me short, right?
For the Friday?
Yeah. Puts me short, yep.
Yeah, so I would be trying to find something in that, what's that, the price action for that line, right? Your second to the last blue line, a purple line.
What'd you say?
So it was at 439, 435.
What, this one?
Yeah. So the next
445.
price point is 434. I'm sorry, 443.
Right.
And then 439 and 435. So puts and everything like that is like whole numbers. You're not gonna get half numbers on it like
right.
SPY. So what, just screw and say go to $4. So if you go back to Nokia, bar chart.
Most likely, it ain't gonna hit $4. You could believe that.
Man,
you don't think it's gonna go that low?
Man, please. If you time it right. So if you
let me take that back. Yeah, if you do it, I don't. Let me see.
We got to change
28.
Yeah. So within 2 days, it's going to hit $4. Look, it's them in the money right now. And look at everybody else's sentiment right here.
Yeah, I agree. I agree what you're saying. I was looking at that 120. Yeah, you may be right.
So the probability of that trying to hit what, $40?
You think it's gonna drop to $4? Yeah.
I mean, like, you making money already.
No, off the top. I think if you do a fold, you got to win. You win.
$4.
It ain't gonna hit $4.
No, what you mean? It's gonna go past it or it's gonna hit? What do you mean?
No, it ain't gonna go to $4. It's not gonna drop to $4.
You don't think he's gonna hit $4?
It's at 443. You think it's gonna drop $4?
You
think it's gonna go way over here, bro?
Tomorrow and Friday.
Yeah, by Friday, you think it's gonna hit that?
No, I don't care about the expiration date. I mean, that's one thing a lot of people don't understand. You can control the expiration date. If you go back to the bar chart and then pick a different expiration date, like that's one thing I struggled. Like I will buy like for the next day. If you scroll up and you change your actual position or your expiration date, so you set the 28th, go, you know what? Do Black Panther 11/11/11. And for $4, look at that. It's still stacked. You still got some time on your side. You got theta on your side. You go to the Greeks right quick.
Well,
I can't get. At the bottom. No, it's not at the bottom. Where is that? Where the Greeks?
It's on the left hand side.
I think that's doable. October. Do enough.
Hey, Price, fix your phone, man.
Y'all
lost me doing the robot. Here we go.
So look at that. That's crazy. That's just wild.
But
that's gonna get fixed though. So basically, every time it rolls over $1.
Oh, 1%. Oh, $1.
No.
It costs you that much, right?
No. I'm sorry, my bad. This is the wrong one.
1%. That's implied volatility. What I'm talking about, right?
Implied volatility is that's what I had. I'm not implied volatility. What is that?
Right here.
No, yeah. I'm sorry. I'm worried about the delta.
Right. Okay, I see what you're saying. Okay.
So what the delta is, every time it rolls over to the the half or whole, that's what you're getting the actual contract for. So let's say if you got the 350s, this is what you're getting per dollar. So let's say if it goes to 250, but at a snail's pace, right? You're gonna get this right here, delta, when you hit this point. Where's Oba at? Hold on, let me see if he's in the chat.
Right. Have you made money doing options?
Yes, sir.
Yeah, so I probably need your number or something, bro, because this is French to me at this point.
Right now, I mean, if you're gonna do options, don't try not to worry about the Greeks so much. So, I mean, they come into play where if you're gonna do strategies like like we were talking about the
butterflies and the
stuff
all
like
that
that,
stuff.
yeah.
Right.
But like just focus on just regular outright calls and puts. Yeah.
Right. Calls and puts. That's it. That's all I'm doing, bro. All the other stuff. Nah.
Yeah. Because and don't get me wrong, like learning delta, all these gamma, thetas, you can learn about theta. Theta is actually time decay. So,
I've heard about that. Right.
Yeah, all these things are intertwined with each other, and you can make a solid.
So you could pick the right. You could have the right strategy, but if your theta is wrong, you're gonna lose money. I mean, you're gonna make money, but it's gonna be a chunk of that. It's gonna be some money that you don't get based on that theta, that decay.
Right, that decay. But yet and still, theta can work for you though.
Yeah.
It can work for you. So if you get a credit spread, and I think that's a bearish position on a particular stock where you're selling a actual call, I believe. And let's say the stock doesn't do anything; it just trades sideways and it trickles down a little bit. Well, theta's on your side because that option is just there, not doing anything at all. You got the time decay working for you. You got that premium that you collected, and you're just waiting for it to expire.
What I saw, Brandon?
Right there, credit spread.
I saw something dealing with them Greeks.
Oh,
is it this one? There it is. Top delta impact. I don't know what the hell that means, but let's see. Yeah, I don't know. I don't know what I'm looking at. Let's see delta, but I don't know. So I gotta do my research on this stuff. This is another about, I've been doing penny doll for 10 years, about 12 years now. So it's another ball game when you get into options.
I like it though. It's not that hard though. It's like,
I don't think it is. It can't be, because I ain't gonna ever believe somebody smarter than me, bro. Period.
Right. Hold on. Can you let Brother Price back in, or
where he at?
I don't know if he left the chat. I don't know if he's trying to get back in.
I'm the host?
I don't know. Are you? I don't know. Is Mo still a host?
I don't
know. She said she was doing the commute. Yeah, I got back in.
But no, like if you learn the basis of like just looking at candlestick patterns and then marrying it with options, it's you'll catch on the options real quick. Like just learn the key concepts of what an option is. Like evidently it's just 100 shares what's inside of a contract.
Yeah, this stuff. Yeah, the fundamentals I know is just the strategists and the Greeks. I'm just not familiar with at all.
I mean, and like once you get to the basis of a call and put, I mean, and get a real grasp of what that means.
So this is what I get from call and put. So let me look. All right, so we got 443, right?
You can go back to the actual option price, if you want to.
Say it again.
Yeah. Scroll down a little bit. Yeah, go right there.
Yeah. There we go. So this is what I got. Listen to me, see if I'm sounding right. So when I'm hearing in the money, right?
Mm-hmm.
All right. So if I'm saying $4, if I'm doing a put, I am saying that this option will not hit $4, correct?
So if you're doing a put, it's the same concept between calls and puts. With a put, what is that delineating? That the stock is going to go what, up or down?
A put is saying that it's going to go down, I want to say.
Correct, yes. So if it goes down and it blows past your actual strike price, now you know what a strike price is, right?
Yeah.
Okay.
That's what I said, $4. So if it's at 443 right now.
Okay, so for instance, right there, let's go to the puts because you're at the call. You see it's right there at the top right.
Okay, puts. So
right,
we got the puts for 450, right?
Right.
So what they're saying is if you're doing a put for $4,
right,
you're saying that it's not going to hit $4. You're saying that it's going to stay above $4, right?
No. You want it to hit and go surpass $4. So 3.
So you wanted to go to $3.50 to $3?
Yes.
Yeah.
You're shorting it.
Yeah, you're shorting it basically. So go back to your chart.
Hold on. Are you saying buying puts or selling puts?
Buying puts.
Okay. Yeah, no, you're right.
Okay.
I'm talking about selling puts.
Oh, selling puts. Yeah, that's the same concept. Okay, so when you're selling a put, it's a bearish.
You do not want to
not
go
bearish,
to
it's bullish. Yeah.
You want to stay above. Right. Okay.
Right.
So yeah, we're good. We good. Yeah, if you buying a put, you're saying that this is going to go down.
Right.
So that I think that might have been what excuse me, Mr. Pryor, I might have confused you too. So I'm all from what I'm hearing, selling puts is the easiest and most profitable, the easiest thing to do. That's why I was kind of in that mind frame. So as far as selling puts, so if I'm saying if you're selling a put, what does that mean? I'm saying that it's not going to hit $4. I'm saying it's going to stay above that.
Right. If you're selling a call, what does that mean?
Selling the call, you're saying it's going down. You're saying
right. Yep.
You wanted to. Okay, so if you're selling a call, you're saying that it's going to drop below $4.
Okay, so here, do me a favor, go to the trading view. See if I can. And this is how I did it. Let's pick a stock that has some meat on it. Like I want to see some value in it. Like I don't know. I think the go-to is like Apple or Meta. That's fine. All right.
Ooh, that earnings call must have been. They had earnings after hours.
Ooh.
Somebody.
And their investors ain't been happy.
Somebody, man.
One of the, hey,
somebody,
dude, y'all didn't hear about I wrote to that.
I'm sorry, Bryce. What you say?
No, I'm just saying, y'all didn't hear earlier this week. A huge investor said, hey man, leave this alone, because Zuckerberg came out and said, hey, I'm gonna spend $100 billion over the next 10 years, $10 billion a year, investing in this metaverse thing. And one of his major investors, like stop doing this. You don't need to be doing this.
I don't care. He can invest in what he wants. I'm saying
you need to focus on
if you got,
you see this?
Yeah.
Hold up.
I mean, that's what I'm saying. All I'm saying is he got negative sentiment behind people who invest in him. If I got 100 million shares of your stock, and I'm saying I'm not comfortable with the way you're moving, I would think you would listen.
Okay, what day was that?
Ooh.
That was, I want to say Monday.
You know who said that?
That was Monday, right?
Yeah.
So from Monday to this is my point. From Monday to right now, it ain't nothing happened. That's my point.
She dropped $20.
No, it didn't drop no $20. It dropped $40.
20, 30.
No, bro.
But the earnings call. The earnings call is tonight.
Hey, go to the 5 minute, 5 day at the bottom. Oh hell yeah!
So let's go with the 20th, right? So you said it happened when he did that?
I'm trying to pull the letter up now. It was like 2 days ago. The guy wrote. It could have been last week, Thursday or Friday last week.
No, this right here is absolutely ridiculous, right here, bro. You don't see this. You don't see no going from 141.
Yeah, you do.
Where we at? 104?
Yeah, you do.
I mean, you see it, but I mean, how often is that?
$40. You see it in the spot.
30, huh? Well, I ain't talking about no spot. I'm talking about. Come on, man. I mean, this $37.
A whole company.
What you talking about? Fuck. What was it? Netflix.
What Meta already was
down.
It's
never happened. I'm saying you ain't finna just run up on this. a $37 fallout in a day, bro. That ain't finna happen. And we ain't even a day in. This just like Price just say, like they just had earnings. When did they have earnings? Like
no, they got earnings today. I think earnings
a couple of hours ago. Good hell.
Here we go.
You see it?
It's
Let's
Metaverse.
I got earnings calendar right here. I got
Fortune
it right
magazine.
What made it? They go
they did it tonight.
Type it in. Did they do the call already?
Nvidia. I don't know if y'all got Nvidia, but that's cool. They said the stock is surging.
I do actually. I'm happy I got there.
Meta Platform CFO says revenue growth from large advertisers remains challenged. While revenue among smaller advertisers remain more resilient. So they got some good. They ain't got no bad news. So it's got to be all earnings. It's got to be.
Boy, I came up 90,000 off of this.
Hey, here you go.
Not 90. I'm sorry, not 1,000.
Check out this headline. This Forbes magazine. Fortune. 24 October. Less metaverse, more layoffs.
Yeah, yesterday. Day before.
Mm-hmm. A meta investor just wrote a scathing open letter to the company telling it to get its mojo back.
Yeah, but right when he wrote that letter, they went up from 125 to 138. You see what I'm saying? That's my point.
And then
right
they had to call
your
letter,
letter,
right?
120. So it definitely they wasn't studying that letter. That earnings, that's madness. Do you know how many people are investing in Meta? And you done lost probably what's that? What I said, 140 to 1.
That's about
15%.
I just say 15-20%.
Yeah, that's about 15%, bro. In a couple of hours. Nah, son, you ain't gonna find that a lot.
No, let me find.
Yeah, I mean you can look, but
no, I could probably find one.
You said Netflix? Let me look at Netflix.
I'm talking about like back in it, like early
back
this year.
in the spring. Yeah, Netflix it fell hard too over the course of about a week. It fell pretty hard, 50% over 5 days.
NFLX.
But this happened after hours.
No, this happened like a couple of minutes ago.
Yeah, after hours.
Bro.
After market hours, bro.
I'm just saying this after market hours.
See, when you say after hours, right? You could be saying from 4:30 to 6:30 or 7 o'clock the next day, right? That's after hours. No,
it doesn't count because it rolls into 3.
This just happened like a couple of hours ago.
But I don't know. I only get to do after hours till I think 8 o'clock. So that's a huge drop. I mean, Microsoft and Google, they fell about 6 or 7% last night.
Right here, Brandon. Let me see.
No, go to year to date. You're gonna see it.
What I want year to date.
Yeah. You see them drops?
Yeah, I don't care about a drop. What was it a day? Let me do it one day.
Hold on, bro. You ain't seen that. Go back to the year.
Go back to what?
Go to a year.
1 year.
And when was that? Was it February or March?
1 day.
It could have been
340.
It may have been Christmas time.
Oh yeah, that's a big one. Yeah, that's $50. Yeah. What I want? What's that? 350 to 2. Hold on, that can't be right. That can't be right. Nah.
Yeah, that did happen. That was it.
Yeah, that happened.
Yeah, like 50%.
350 to 267.
Yeah, you don't remember that?
Nah, I remember.
Who was that investor that lost that money? Was that Bill Ackman that lost what?
350 to 267. That's like $90. But even still, that ain't 15% of their company. That's still like 15% of share.
That's a big chunk of change to lose.
That's a chunk of change, but that's coming from 350. Meta
What do you
is
mean?
at
And
100.
well, you're looking at the last leg. I think overall it lost 50% over a short period of time.
Yeah, scroll up. You missing that piece too.
I miss. Oh, I see this one here.
Yeah.
Damn, Netflix. Oh, I know. I remember that because it was the subscriptions kept falling.
Yeah, I thought you would. Yeah.
Right.
Exactly.
I remember
Yeah.
Yep.
So you can see them legs. 1, 2, 3 legs down.
Yeah. Yes, that's a grip. That's a grip. Or the earnings calendar here. I like that, man. I'm liking Tivoli already, bro. So it's showing you
Hey,
the
so
most.
see
Go ahead.
what your news say about the earnings call part. If you had the news on that.
On what?
What just happened? Somebody need to pop up and say something. I know somebody writing about this.
For Meta?
Yeah, you don't think so?
Yeah, I'm sure somebody. Well, I mean, it's kind of right here. As tech stocks sell off, pre-market prep breaks down this sector rotation. Oh, that got Google in it. Yeah, I think Google had was Google struggling too?
Yeah, that was yesterday. Google and Microsoft, both of them lost about 6 or 7% each in after hours.
Yep, Tuesday. Yep, it started pre-market prep calls. Dennis Dick was alerted to a change in sentiment early after hours trading Tuesday following the Microsoft Corporation and Alphabet Inc. earnings reports. Yep.
Awesome. Seeking Alpha.
It got to be something else with this Meta too. He must. They probably revised the guidance.
All right. Okay, let's look
had
for Meta news. You saying let's look for some news. Meta. Damn, man, that's you can't. You can't get down like that, bro. What the hell?
See, this is the part that Oba always talking about. Over AE talking about. This stuff is exciting. It's better than your sitcoms.
Yeah, because I'm like Thunder. I want to know what happened. That's like walked out and come back and the main character is shot, laying on the floor. What happened?
Right.
Yeah, I'm with you there, but I'm just saying, if it's just a company nobody care about, fine. You can't have, arguably top 3, top 4 company lose a quarter. I mean, about 15% of it. And it's all based on earnings.
Hey, go to Seeking Alpha.
Hold on, you see this? Okay, I got you. You see this? What he just was saying? I don't want to play it. Earnings report. They came in at 27 billion on revenue. They came in 27.7. The expectation was 27.4. What the hell?
But then they beat,
Yeah, so what are they doing?
It got to be the guidance. I promise you, it got to be the guidance.
Earnings per share was 164. Oh, that's what the earnings per share was 164, but it was expecting 189.
Oh,
I'm guessing that's it. Yeah, that's the only thing I can.
Nah, that's more than that. I mean,
but the real issue here is Q4 guidance. It came in lighter than expected. Meta saying between 30 billion and 32.5 billion. The street was expecting 32.2 billion. He also said pacing spending on Reality Lab investments. That's what you're talking about. But that past 2023 spending will be significantly higher. Okay. And that's the operation. I want to read it out. I want to play it, but I don't want no problems. Oh, they operating at loss. Oh, they operating the Reality Lab operating losses for the. Let me see. Losses for the quarter. We're at 30. They lost 33 billion. Are you serious?
Yep. And hey, think about this, Mr. Thunder.
Hold on.
They beat. Okay.
Lost for this quarter.
Go ahead. Keep listening.
No, this for the quarter, Brandon.
Well, they lost 33 billion for a quarter.
For the quarter. Go ahead, Price.
No, I'm just going to say why. You know they be giving out them headsets, and then they just launched a new headset.
My little boy got one. Not my little boy.
Yeah, Well, I know some grown men that got them, and you know, and they was giving out a little cheap headset, and then they came out with a new headset, and now you got investors talking about, hey man, you spending too much money.
All right, here we go.
Writing a letter, you spending too.
Yeah. Go ahead.
I'm saying you got investors saying you're spending too much money, and now you talking about they done lost 33 billion in just 90 days.
90 days.
How the hell did you lose 33 billion?
Reality Lab operated losses for this quarter. We're at 33.67. Now here go the kicker right here. That versus expectation of 3 billion. So how you go 30 billion over expectations, bro?
Wait a minute. Are you saying they was planning to 3 billion?
They was planning to lose 3 billion. They was cool with the 3 billion. But they actually wind up being 33 billion.
Okay, that explains your big red counter right there. Come on,
that don't make no sense though.
Yeah.
Oh, here go another one too. Meta Q3 adjusted EPS earnings per share $1.64 was the actual, but they was estimated $2.72. Shoot, man, that's over $1. Man, Zuckerberg, boy.
Well, they bugging.
And they said that now they have lighter users. They got a lighter amount of active users at 2.96 billion.
Well, this company dead. Watch tomorrow. Watch
compared to 2.97. They ain't dead.
They fall anymore.
Boy, they gonna eat this up. Let the SPY fall tomorrow. It's gone for Meta. Meta gonna be down to what, $50?
How much of the SPY does it make up?
It's in the SPY.
Man.
Let's see.
Let me try to Google it real quick.
Oh man, what a SPY. No, SPOY.
Yeah, I might need to get some puts tomorrow.
Oh no, everything chilling. We're chilling right now. So it can't be doing too much. It can't be making too much noise.
Well, to me, the big dogs.
Look,
Microsoft.
Boy, it's blood in the water. No, you talking about what, SPY, or you talking about Netflix?
It's SPY. I'm talking about the impact Facebook gonna have on SPY tomorrow. I want to see where that's gonna be.
Yeah, I'm just trying to see what
Meta is.
What percentage? Yeah, it's probably like 2 or 3%. A lot of people
blood in the water.
Yeah, it's blood in the water. I agree with you, but I don't know if it's gonna hit the SPY.
Nah, it still. I seen trades or a stock dip and the damn SPY still start to rallying up.
I mean, we just saw. We just read in the news that it's they expected the pre-market to be decent.
Yeah, because it's less than 1%. It's less than 1%.
Okay. What far as the was it
the,
NASDAQ or
EFT? The SPY. I didn't do the NASDAQ. You know, you got like Microsoft and Apple like 7%. They both of them together is 15% of it.
Okay.
Let me see if I can do the NASDAQ.
I don't even see it on the NASDAQ.
It may not be on there then.
Oh no, no,
right here.
Yeah, it's
NASDAQ.
on the NASDAQ.
Yeah, it's on
2.64. 2%.
Oh,
it's running.
okay.
It's one underneath communications services.
Oh
boy.
Oh, NASDAQ
Hey,
can't get a break.
Hey, Thunder, do me a favor. Go to bar chart and type in Meta, and then do it for tomorrow or like Friday. I want to see what the option flow looks like, or open interest. Is that it?
Okay, what is that? It's at one. What is that? 129.
Yeah, this is for Friday, right?
Yeah, let me see.
Go all the way down at the bottom.
Friday, yeah.
All the way down at the bottom. Go to the put the call ratio.
Oh yeah, we're chilling. They got calls. They got calls, man. That's what I'm saying, bro. I hear what you saying makes. I'm with you, but no, I don't think.
Well, how you know what you hear me though?
Huh?
How you hear me, but you still saying no?
No, I'm saying when you saying blood in the water, right? So let's say this was a dip. It's a bump in the road.
Okay.
Overall, do you see a long term? Nah, they saying they got calls out, bro.
Okay, so like you said,
when you say long, I mean, what are you talking about though? Because you're a trader. Are you talking like 90 days, or are you talking about like next year?
Let's do this. Let's keep it simple.
Okay.
Okay, we got open interest at 51,000 at 125. So that's a call. Yeah. Well, no, that's lower. Let me see. 51,000 compared. Oh well, yeah. Maybe they are down on them.
Yeah, I wouldn't even look at them until like next spring 2023. You know,
maybe they are down. They may be down on them, bro. I mean, we got some interest here. I think it's more in. You got that 125, right? But you still got a lot. I mean, you got the 51,000 here, but you still got 6, 12, 16, 20. You see what I'm saying? You still got a lot right up in here too. You still got a lot right there.
I don't know, Mr. Thunder.
I mean, I'm just
I
look
know
at it.
The data. It's the data. I got you.
Look at it, bro. That's the open interest. I'm just saying I agree with what you're saying, but I'm also looking at these numbers too.
All right, well, let me say it like this. I'm scared of that one. That's how I say it. I'll tell you, I'm scared of that one.
Brandon, come on. All right, so you got the 125, right? You got the 120. They seeing they dip. They definitely.
Is that a call or put though? What we doing? First of all, what we doing?
It's a call at 125. So they're saying that it's going to dip a little more, but it's going to come back up to that 125, and then from that 125 to the 135 to the 1. That's what I'm saying.
Question is,
I mean, they got it coming right back.
You know where it is right now?
Well, oh yeah,
the stock is at 105. No, the stock is at 105.
Okay, fine. So they're saying that it's gonna come back. That's my point.
You know how long does it? You know how long it takes?
I don't think y'all need to be doing no puts right now. I think you should be doing calls.
Okay,
now,
yeah, I can see what you're saying. I can see what you're saying, but
yeah,
an opportunity like this for a stock that normally follows the SPY, even the SPY and NASDAQ themselves, which is all basically tech companies, right?
Yeah.
Within the actual NASDAQ, the QQQs, right? Mm-hmm. This is an opportunity, like I said, blood in the water for, short-term traders, hedge funds to push this thing a little bit more. Have they eaten off of this or 100%? Like somebody knows something for a stock to fall this hard, this far.
I don't even care though.
I know, I know.
Yeah, you know me. I don't get that. I could care less. I'm saying it's gonna hit back.
It's gonna take its sweet time though.
Calls in.
It's gonna take its sweet time because it's not jumping all the way back to $1.25.
But yeah, people looking at this and saying, the sky falling. No, Shoot, this is like
No,
you said,
I'm not saying that.
opportunity.
Yeah,
It's an opportunity for you to come up right here. Hell no. Ain't no downside to this, buddy.
I wouldn't
It's
do
all
no
up.
call like Friday.
Say it again.
You want to give yourself some time, like what, 30 days, 6 weeks?
Yeah, stretch it out. Don't. If you don't have like a fundamental thesis, or if you know something for sure, you know, always stretch it out. If you don't know like anything at all, stretch it out. Like I would definitely do.
I'm gonna stretch it at 120. I wish it.
What's
so
strike price?
What I need
What
$1,000. I need what $1,700 to get this. Is that what it's saying?
17.25 times 100. That's for one option.
I need $1,700, right?
Yep.
Yeah.
To get that one option.
I mean, of course, it's not worth it, but I'm saying, man, that'd be. I think it's an automatic win.
I want you to paper trade this one.
Brandon, are you saying you don't expect for it to get to 125?
No, it's not getting 125 by tomorrow. I guarantee you that.
All right, from Jay.
But
okay,
it's that if you go to the chart back.
You saying 108? You saying 10 something, right?
It's at 105 right now.
Okay, fine. You're saying that by January the 20th.
Oh, okay. January 20th, yeah, it'll jump back to 125 possibly.
Right.
Oh yeah, definitely get 125 by then. Yeah,
right.
Yeah.
But like for tomorrow, next week,
85 days. No, not tomorrow. I said, yeah. At least I want you to paper trip. No, man. Yeah, it may get to. Okay, let me do it tomorrow. Let me do 120. Where is that? 1028.
Well, hell, I mean, what, we still fighting inflation? You know, the market data, the house market data come out.
Well, here's the good thing. I think either tomorrow or Friday, we got GDP coming out. We got some GDP data coming out, and you got a little consensus that's going to come out and say we're going to have some growth, 2-3%.
2 or 3%.
You know, that's the consensus. Don't shoot the mess. That's what I'm hearing. I'm putting it out there. So,
man, they said that last time, and it wound up being negative for the second quarter in a row.
Well, I'm just saying, but some stuff I've been listening to. There's some chatter out there, but the camps are split. Of course, you're gonna say, I'm like negative growth 2 times is recession. Somebody gonna say GDP data coming out is gonna say some growth is gonna be in the picture.
It better.
We'll know in 2 days. We
don't know in 2 days.
Growth from where though? That's the question.
There you go, Brandon.
From
I've
where?
been asking Brother Price this for the last month. Him and who is somebody else. Like, where is growth coming from?
Oh, I said rally. I never said that everything's gonna turn around.
You didn't say a bullish. Yeah, you said a bearish. What you say?
Yeah, a bear rally.
Right. He didn't say that. I'll give him. Yeah, he did.
Yeah, I wasn't saying no, not turn around. I'm not. We got I'm thinking 18 months. And
we'll see
before any of that. But I'm just telling you, that's what I'm hearing. And then what? First week of November or second week of November, we know we're getting another rate hike. I don't care what nobody say. I think we are. Yeah,
got no choice.
Yeah, and then I think we get CPI data a few days after that. So I don't know. Only thing good about right now is we're coming into retail season, and maybe that'll carry everybody over.
But still, you still gotta rely on the public to get those numbers in order. And not even that. I mean, you still gotta depend on these companies. Well, try to even sell goods, and then you gotta think about the supply issues. Is there enough supplies? You gotta think about pricing. I mean, I don't think Christmas is gonna be good this year.
Well, macro wise. Macro wise, we was on our way. We didn't had two bad earnings from the tech side, but
right.
we saw about 10 9-10% in all the legacy markets for the last until yesterday. So I was looking at a little pullback. Now this may be a little deeper pullback with this Meta news. We'll find out here in the morning.
Man, YouTube got revenue issues. Man, listen.
Yeah.
I want to see the positive. If you tell me it's at 2 to 3%, I can't wait to see that. I can't wait.
I'm anxious myself.
I don't know where it came from. Like where what happened?
They using different math, man. Like, ain't no way we could. Look, in my house, I can't say. Math. Yeah, they gotta be. I mean, I can't come out and say, "Hey, baby, I'm doing this project, and we may get behind 3,000, and then I'm gonna have some problems if I come in and say 33,000 short. You know what I'm saying?
Right.
This dude just did that with $1 billion. Him and his team. So.
But how do you lose that much money though? Like,
bro, do you understand? They was expecting 3 billion, and it actually was 33.
I can't wrap my mind around that.
I don't think that's right, bro.
You saw it. You saw it.
33 billion.
33. Let's look at it again. Maybe I'm tripping. All right. You know what, Brandon? Maybe you're right. Maybe I'm.
And total revenue, what you say total revenue was, Thunder? You said 27 billion?
Let me see.
So they're still down by what, 10 billion?
What I was looking at? Was I looking at the front page of Meta?
I can't remember. I thought it said total revenue was like 27 billion.
Damn. Look at that. He said big tech missed earnings by 20 miles. Dang.
20 miles.
Hold on, let me see if this might be the one. Dang, boy. Oh man, WhatsApp had a global outage. That's Meta too. That's Facebook. One of them, boy.
Yeah, that ain't good. That's a bad time.
I don't know. I think somebody's gonna buy up Facebook or pieces of Facebook.
Nah,
I think they got they ain't got no choice. Like, I think Google or somebody.
Oh well, yeah, maybe Google, right? But I don't. I mean, they struggling too much to be buying anything.
Right.
Well, they partnered up with Microsoft. Microsoft supposed to be helping them out with this metaverse.
Yeah.
They're gonna mess around and let Tim Cook slide in there.
Right.
Because he eating everybody lunch right now. Yeah, he eating everybody lunch.
That's the thing. I'm trying to get to this video. I want to see what that guy said. He said 3. Wasn't this guy right here? It was, let me see.
Yeah, I think it was that guy at the bottom.
I thought it was that guy. Yeah, it was Dan Howley. Definitely was him. Let me do a CC.
Oh, this is Microsoft. Yeah.
No, it was one he did for Meta.
Dang. Is that it right there?
Which one?
The second one.
Second one.
Scroll down. Yeah, or is it that one right there, the 4 minute?
Uh-oh, my bad. Why is it okay?
It's not this one.
I'm finna see. I don't know. It's ads.
Oh.
Ooh. Nope, it ain't this one. Man, which one was that guy? That's him. It was him. I just don't know.
Check your history. I don't know if you want to do that, but I forgot you still on YouTube.
No, this what you call it.
No, I'm saying if you want to check your history, because it'll definitely be in your history.
It'll be that one. I don't even know how to check the history.
Go to the three dots on the right hand side of your screen.
Oh, I see. Oh yeah, let me stop sharing. Let me see. Oh yeah, that's the Nokia. That's a Nokia. It's just going. It's doing a Nokia.
So it should three dots. It should be like new
got the
tab.
three dots. History. Yeah, then it says Nokia News, launch meeting for Zoom.
And then you click on history.
Understand the technicals.
But you're looking for Yahoo, right?
Hold on, let me see.
We gotta click on history, you gotta click on, and then it should bring up everything.
Where my thing at? Where I'm sharing? Oh, share. This is it. Nokia, Meta. Morning watch this. Meta. That was bar chart.
It?
What time was that when we looked at it? Was it 8:51? It might have been somewhere.
No, but that's bar chart though.
When the bar chart we were looking at?
No. For the news for Meta though. Yeah, keep scrolling down.
Yeah, it was about 7:30.
Huh?
I think it was about 7:30. Well, your time, y'all East Coast, so about 8:30.
Yeah, about 8:30.
Yeah.
Nokia 4. Okay, no, I know it went down that far. Okay. So it's one of these right here. Let me try. Let me try this first 851. I'll try that one.
You look for the news, right?
Yeah. Let me try news. Nope. News and headlines. 12%. Damn. Alphabet dropped 10%. Over unclear reasons? What you mean? Hold on, Brandon. How can Google drop over unclear reasons? 10%? I see if it was, 2 or 3 cents.
Nah, that's 10%.
And don't nobody know why? Nah, son. This is BS. You can't drop 10. Okay, it announced a profit. Wow. It announced a profit of $1.06 per share. That's a drop came as a surprise. Oh, so they I guess they're saying they don't know.
Nah, they know.
Yeah, they know. I did see this one. YouTube ad revenue dropped by 2%. I did see that, but that still ain't. Come on, man. No, you can't lose 10% of a company. Don't know if I know why. Nah, I don't think it works like that, bro. Dang, I want to get that video. It ain't it. Well, you saw my history. I don't know which one it was, but it had to be that guy.
Yeah, it was him on it.
Let me do it. I'm gonna find it. Now that joint say, oh, that was Yahoo Finance. 104 after hours. It closed at 120. That's what I was telling Price. It closed at 1:30 at 4 o'clock. And in like 2 hours. Yeah, you don't see that a lot. It lost 12% of the company in a couple of hours. Maybe this is it. It was him, but I don't know. Anyway. But what else, man? What else we got?
I want you to day trade this. I want to see.
Yeah, I mean,
like open up.
I'm gonna trade. I'm gonna do a call, bro. I ain't doing no. I'm doing the calls. Cause it ain't going no lower than this. Look at that joint. It was at 115 at this time. And it dropped another 10. All this is after hours. Bro, you ain't finna see that, Brandon. I'm sorry. You may see something drop $100 over the course of a day. Fine. Oh, this dropped by $30, $40 per share in a couple of hours. Amazon down, Google down, Apple down, Snapchat down.
I think Snapchat is
Spotify
dead.
way down. And they say a 2 to 3% growth. I want to see how. Let's look at the NASDAQ. Maybe I'm tripping, bro.
Hey Mo, what's your opinion on this?
Well, Mo at Mo here?
Yeah, she here. I don't know if she got back to the house yet.
Maybe I'm tripping, Brian. Let me see. What NASDAQ is? QQQQ.
Yeah.
Let me try this one. Bro, I'm trying to see, like, where is the he said 2 to 3%. Wow. So that's 2022, right? This is start. This is November 2022. We've been in a free fall. How? Nah, bro. Ain't no way. It's no way.
We have.
And we done lost 100 points on the NASDAQ, bro. I mean, on on the QQQ, man. 120 points.
Oh, I think I found the video.
You did?
I think so.
Oh, yeah, share.
Oh no, I go to what was it? Go to Meta on Yahoo Finance.
All right.
And then scroll down like in the news section.
Oh, let me show. Oh, not bad. Scroll down to what?
Scroll down a little bit past that. There he is right there. Go up.
Right here?
Where's it at?
Is that it?
Yeah, I think that might be it. Is this it?
This is it. They came in at 27 billion. Expectation 27.4. So they was up. Q4 guidance. Meta saying between 30 billion to 32.5 billion. The street was expecting 32. So if they get to 32.5, that's cool. They'll say they're going to be pacing spending on Reality Lab investments in 2023. So pacing means they're going to be pulling back. But that past 2023, okay. But in 2023, the spending will be significantly higher on that. And that's the operation that cost them $10 billion. Last year, they tried to ramp up the metaverse capabilities and move into that kind of company. Reality Lab operating losses for this quarter was $33.67 billion. That's versus expectations of 3.9 billion, 3.09 billion. Now they did have a little bit lighter than expected monthly added 2.96 billion compared to 2.97. Daily actives beat that came in at 1.8 versus 1.9 to 1.8. Share down more than 6%. And you can imagine what it'd be like. Oh, that's what you're saying, Brandon. You can imagine what it's going to be like tomorrow as everybody digests the news.
Ain't no digest news. You know, sellers gonna sell.
Damn, the stock already down 62%. Yeah, no, let me go to my thing. Meta. What the hell is Zuckerberg doing over there? Year to date. Oh man, that's crazy. How you did that last time, Brandon? When you did that?
What's that?
When you do this one to that one, and they give you the thing.
You talk about the Fibonacci?
No, when you did this one right here, and then go to here, and it'll tell you what the percent is.
Oh, so you have to go to. I go here. Oh no, not the fib, but the little arrow to the side. And then what you want to get is what is it called? Scroll down a little bit. Hold on, let me check on my screen. Okay, my fault. No, my fault. Go here, the little arrow, and then this is what you want. Price range.
Oh, price range, yeah. What's a year? Do a refresh. So from here to here. 60%, yeah. That's madness, bro. And this man,
what was it? 200.
60.8%, 61%.
261%. 211.80.
In 10 months, he done lost 61% of that company.
I just think if you had just regular, naked puts on this thing,
be a multi-millionaire.
Right. And that's what options do. They give you that, that choice of, stretching your money for the long term.
That's crazy.
Without risking, majority of your capital.
This is craziness. This is madness, bro. and he's still in office. I mean, he's still the.
I don't think.
I mean, they finna let that man run it into the ground. Look like. From what I'm saying, they betting on Meta, bro. I mean, they betting on this metaverse, and it better pop.
What type of pop you talking about?
I mean, it better pop off, bro. It better get going. Because if it don't, I mean, it's losing daily users, earnings down. I mean,
peace, everybody. Peace.
Sonny.
Hey.
How long you been looking, man?
I just got on about a couple minutes, but I was gonna say, they in their talk today, they had where they talked about Meta not having the full metaverse the way they want it until 2030. And so most of these talk, like, aside from that, it showed like they didn't have good guidance. And so that led people to start taking money, start selling, taking their money out of the market. And that's when it dropped. So on the back chat, I had sent a picture of how much it dropped within a couple minutes.
Hold on, let me see. How do I stop sharing? Let me just stop sharing. Okay, chat. I don't see it. It's in the YouTube chat.
No, in the other chat here, I could show it.
Yeah.
Can you guys see the screen?
Mm-hmm.
All right. Yeah, from a $40 drop.
Yeah, we talked about it, bro. I put it up on the chart.
Yeah.
Me and Brandon, we definitely talked about that, bro. I was saying, man, no, you don't see that a lot.
Yeah.
Not a lot.
So
I ain't saying you don't see it ever, but you definitely don't see it a lot.
All right, now, Sonny. Okay, so seeing this chart, you knowing there's blood in the water for a drop like that. Now, what is your sentiment off of this, and what you experienced so far in the chart? Is it going to pop up, or is it going to continue down to the downside?
I'm actually pissed because I was supposed to have put puts on this, but I left my Google puts in my my Microsoft because it was up. But I think it's gonna pop up like tomorrow,
or like the end of this week or next week.
Let me see. I'll let you know right now. Let me take this off. Oops. My bad. Hold up.
Let me see.
All right. Okay. What is it? After hours, it dropped under. Oh yeah, I already got a line under there. No, heck no, it's not coming up. This is my old line. This is my old line. No, I had this line a long time ago when they was going up 300. I told myself if they ever came back down to this line, I'll start buying. And now they way under it. Now they at 104.
Guess what the last time they was at 104?
I'm finna see right now.
I can tell you 2019.
On the longer chart, they haven't been there
2019.
Since 2019. Wow. 2017.
And this man's still in office. He's still there, bro.
No, not even 2019. 2019 was when they had hit the lowest lows today. But after market, they had
2016
since Oof.
And he's still there. And he's still spending.
Don't the Feds own Meta or something like that?
No.
Or have stake in it?
No, I think he's still going through his legal
that is
legal battle right now.
Look at that. That is ugly.
He done lost 60% of his company in 10 months. And ain't nobody saying nothing.
Oh, that's what I had put in the back chat. Yeah, $702 million that they lost in the after hours.
Oh, yeah. I mean,
it's close to $1 billion in the app, just in the app.
I would just that's what I was telling Brandon Price. Like, dog, has it ever happened? Yeah, but you don't see it a lot. Not in no hours. That's what I was telling him. See, we looked at after hours, right, for Netflix, right, and they lost about $100 in after hours, but that probably was over the course from 4 p.m. to probably 7, 8 in the morning, 9 in the morning, right? This happened in about 3 hours. Yeah, brother, you don't see that. Off of earnings? Yeah, that's crazy.
Yeah.
Oh, stop sharing, Brandon. Sonny, just for 1 second. Well, not for 1 second, maybe more than a second.
All right, let me get it off.
All right, so let me share this, right? So it's my Robinhood. So I put $70 in there with my little boy. So what we were looking at for Nokia, right? So Sonny, look at me, right? So this is Tiblio. It's a little thing. It's $35 a month, but it kind of shows you some market plays as far as options concerned. So the one I was looking at to kind of get into was Nokia.
Why Nokia?
I'm about to show you right now. Largest positions. So according to this, the largest positions right now is Nokia, and it's for January of next year. They got the call at $7. They have 256 open interest, right? So what my matter? So
what's their market cap?
I don't know. Let's look. Finance. Well, what a finance? Oh, that's Yahoo Finance. Financials.
I mean, if you don't know why you buying into the company, like other than like I'm talking about is what's the motive that you buying it? What's the motivation of the company's growth to make you want to buy into it versus like, oh, the options is cheap, so this is why I'm buying it, or I see potential of this being this and this because of a name, like what's the long term in that one? Because it's a lot of stuff I could say about it, but I mean, if you have something better, then that's
no. For what the only news we saw was they had a deal with China to do some stuff, some work in China, right. I don't know the exact reason. I don't even care. My point was when what you was looking for? What was I looking for? The financial
market cap.
Where's that at? Oh, there we go. 24 billion.
Okay, cool.
25 billion.
That's a good market cap.
Yeah. So on bar chart, we see the for 120 is going for what to call that? Is that what I'm looking? Okay,
okay. What day are you looking out?
$7. This is 120. January the 20th.
January 20th.
Right. So we looking at a $7 call
for $2.
No, it's for $1 now.
Oh, it's for $1?
Yeah. What you see? So that's what I was saying. So okay, let me go to my Robinhood.
I mean, it's ranging $1 and $2. It's on the.
Yeah, don't matter. Yeah, whatever. Yeah, so
it's on Teeter.
Right. Trade.
Because I mean, you could have it where it's $1, but it's on the Teeter and it went up $1.
So I want to buy a call for 23 at $7. Okay, they got it at $2. They got it at $2. So
have you looked at the chart, like on what they doing or anything? Because they just had earnings. I'm looking at it on Webull because Webull faster, but they just had earnings. Did you look at it on the chart?
Yeah, no kid. Yeah, we did all this, man, like 2 hours ago. But let's see. So we got with Nokia, we got definitely some nice dip, but it's been rising since the earnings, as we see, right?
Yeah, for like 3 days. 4 days.
4 days, yeah. So
it ranged up to fill. Well, from what I see on the Webull, it ranged up to fill that gap after its earnings, because it had, I guess, it had decent earnings, and so it ranged up to fill that gap. But you can, when you see them candles at the top, you can see it's selling pressure.
This is what I'm asking.
What's up?
So we got the Nokia. We done looked at the financials. We got 24.8 market cap. We got strong growth after the we got, I think, a decent earnings and growth after the earnings. Do you believe that me getting this $2 option should be something I should do?
It depends on how you play it. If you playing it because you really think it's gonna hit 7, no. If you playing it like how I do sometimes, like where you buying a bunch of them and you just trying to let it hit $1 or $2 and then get out, then yeah, that'll be a cool one.
So what you saying? Don't go 7. Don't go to the 7. Go to maybe 5.5.
I'm looking at the chart. It hasn't hit $7 since January 2001. I mean, and that was on the fluke when it did a spike up because of some news. So
all right, what I'm asking you is, what would you buy that?
Would I buy it?
Would you buy it?
Yeah, I mean, I would put money into it because it gives dividends. Let me see how much dividends it is. But I will put money into it because it's a steady company. It got a high market cap and it gets dividends, so I would do something like that as far as making it a dividend play, but trying to, like, I don't know, trying to make it seem like it's going to be a growth stock. Nah.
No, bro. I'm talking about this option for.
Yeah. No, that's what I'm saying. The option to be only cool if you're gonna get a few dollars off of it, because it's not gonna raise that high. You got to look at not only just the company in itself, but just the market in itself. The market in itself has a whole lot of pressure going down, and so you have up and down.
Son, what I'm asking you is,
what's up?
All right, so is that 442 now? Do you believe it's gonna get to $5?
Yes.
Do you believe you'll get it at $5.50 by January the 20th?
No.
So you saying $5 will be a play for you?
Yeah, $5. I definitely think it'll hit $5.
All right, cool. So you, that's a $15. That would be $15, right? Let me see. Wouldn't that be $15? Yeah.
Hey, Sonny.
What's
Sonny,
up?
my fault, bro. Hey, Thunder, look at the overall direction on that stock, man.
Yeah, because I was saying it would hit. Well, its resistance is at 485. I mean 496.
Want to go back? Go forward a little bit. Just look at 2020. Do year to date.
No, we know where it is now. We know it's a failing
I want
stock.
you to see.
We already discovered that. What we're saying is it going? I don't care about that. Is it going to hit $5?
Right.
Is it going to hit $5 by the January the 20th?
I just put it on
praying. You praying on that thing hit $5?
No, but hey,
it don't matter.
This is what could make it. This is why I say I could kind of see it hitting 5, right? Because not 5 because I'm looking at it now. It's at a resistance of 496 at the EMA, but
it doesn't hit $5 many times. So we don't even play about $5. So we know it can hit $5.
Not this month.
Not this month, but
not this month, not last month, maybe the month before, but
January. I mean September, it was at $5 the whole month.
Yeah, and then they had bad earnings, and then that was the end of it. Matter of fact,
they had good earnings. They had their earnings. Well, I don't know if it's bad earnings, but their earnings.
They held out on their earnings, and then that's what made them drop. And then they ended up giving the double earnings. That's what it shows up right here. They gave out double, one before the other.
Okay, did they have a good earnings this year? I mean this quarter.
It says Q3, yeah, they had 6 point.
You can see it, Thunder.
On what?
If you click on the E, click on the E. And then click on more. Right there. And you can see your earnings. You see earnings, the word? To the right.
Earnings. Okay.
Oh, right. And then you can see. Go ahead, Sonny. I'm sorry.
What I'm looking for. Right here? No. Where I'm looking at?
Well,
third quarter. This is third quarter. So they expect
they just beat it, and then that's why they ended up going up.
Right.
So they have they have the means to barely beat the earnings.
Right, there we go.
Because they have the market cap to back it up.
Mm-hmm.
So, but that's why I say, like, as far as the dividend stock, yeah. As far as trying to put my option play in that, no, it's not even volatile enough. Like, you wouldn't even get nothing out of it anyway, even if it did try to rise. You got to jump in the option. When you get in the options, the best options to jump into is when it's volatile. If it's not volatile, you're just wasting your time, or you just hoping that it's going to get volatile by earnings. Like when Oba used to put up earnings all the time, it's on the page of like, okay, he got earnings coming up now, showing you which companies is coming up. So that way you could jump into your options now while it's cheap before it gets volatile and it starts getting expensive.
So Sonny, explain for the audience, explain what you're looking for when you say volatile.
Okay, what volatile means, you're looking for the volume. When you click onto whatever stock you're looking at the volume, and you're looking at how much value you have. If it's anything under 1 million, it's not even worth it. But if you're looking for a long-term out of the play and you're looking for it cheap because you're expecting it to go up, then you're looking for that low volatility to buy you something cheap because you know the stock don't really move.
This joint go up for $2.
Still talking about that, man. Let that stock go.
I got something for you. Look, why don't you do this? Why don't y'all go on to SoFi, right? SoFi is one of your meme stocks. It's volatile and it's cheap, and it don't move past $1 unless something really crazy cracks off. So every time it goes up like about 10 cents, it goes up a couple of dollars on your bet.
So SoFi is trading for what? $5.49. It's down right now, right?
It's always like that. So
okay, cool.
So this is
let me pull up so far. Let's see where we at.
So right now, I think you waiting on what? MasterCard.
Oh man, I see what you're doing. I'm doing calls all day on this.
Yeah. MasterCard. Who else? Had earned a Visa.
No, let's stick with here. Come on, let's.
No, I'm thinking of the ones that's gonna make this kind of boost up. Well, later. So some companies are sync with other companies, and then when things happen,
I understand what you're saying. Right. So Apple and NASDAQ. I mean, Apple and NASDAQ. Yeah, that's what I'm saying.
Yeah.
So it's at 5:49. They have a call at 6:50. This ain't gonna do that in no.
It's not gonna get 650. What I would do is like, let me get on mine because I can't really see yours. Okay. How many days out? You talking about January still?
I don't care. No, that's October. This is Friday.
No, I'm saying, did you want it still in January?
I don't care. I'm just saying, well, yeah, whatever day you say.
Okay. Well, think of it like this. If I was to do it like that, I'd probably get the $9 shot, making it cheap, right?
When?
For January 20th. We're getting back to the day you was talking about.
Okay. Jan 20th.
Reason being is because they do own a football stadium that they pay 25 billion to. Well, I think they gotta pay 25 billion over a long period of time too. So it shows that they have some kind of market cap to basically generate income based on the games, everything that's going on over there. Just showing that it has steady income, right?
All right.
And so now we get into the football thing. By February, it'll have more. It'll generate even more income by then to build up from where it's at now. Plus, it'll be more of a if you look at the fundamentals of it, it'll be more of a relief come January because of the rate hikes.
All right.
This is what's expected.
Fine. $9, right?
Yeah.
You saying you would buy a call for $9 right now?
Yeah.
And that's $1.30. I'm sorry, $13.
No, I would buy a $10 strike price for $9 in January 20th. That would be my thing.
Oh, you do the $10, not the $9.
No,
okay.
I do the $10 strike. See, I'm cheap with it, but I buy a bunch of stuff.
No, fine. Cheap. Yeah.
So I would probably buy like 10 of those $9 at a $10 strike price. And then probably once it goes, I mean, even if before it even gets to that, if it gets to like $20 or $15, I'll probably cash out, or probably cash out half and let the rest hang in.
Okay, so all right. So let's do this. So you're saying overall $20, right? You'll take that $20 to the crib. It's not going to be $20 strike price. It's going to be $20.
No.
That you make off the $10, the 10 options.
Make off of it. So
right. So you're gonna make about $1, $2 per option, right?
Well, if I get 10 of them and it goes up to $15 and I take out half of it, I'll make $75. So basically, I'm buying it at 9 cents, right? 10 of them would be $90 for a $10 strike price.
Mm-hmm.
Half of that is $5, right? If it gets to $15 per contract, and I take out half of that, 5 times 15 is 75. You get what I'm saying?
Mm.
So I would take that out and let the rest hang. See where it goes.
Let it stay.
Yeah, I'm talking about in between, like say for instance, they got earnings coming up on I think the 1st or the 2nd
No,
of
you're
November.
saying that you would not sell those options. You wouldn't sell.
I wouldn't sell the 5. Yeah.
Right. You would keep the 5. Okay, cool.
I'll keep 5 and then I'll let 5 hang.
So I got 60. I'm trying to teach I was going to teach my little boy about penny stocks. I gave him $100, right? So he signed. You weren't here at the beginning. So my little boy signed up for Robinhood. I said, I signed up with you. So okay, it's a little. He had a little marketing thing on campus, so they was marketing Robinhood. So fine. So I gave him $100. He put in there. I put in $70, and I'm just trying to show him how to invest. He's a business major, right? So I'm just trying to show him how to invest his money. So that's why I got Robinhood. Y'all, I'm on Thinkorswim and Webull. I mean, and Moomoo. So all this other stuff I don't really care about. So, but I'm just trying to kind of getting used to how Robinhood's horrible. I didn't know it was this bad. But it's fun. I think it is simple. It's very simple, but it's very horrible at the same time. So, but the options, I never did options before.
Is it going to be to where he is continually putting into
I'm just he's 18, man.
What I would say is this, right? You know how we be in the penny stocks and stuff. What I would say is for him to look at the cheapest stocks, right? It's like what Warren Buffett say, the cigar butts, right? Look for the cheapest stocks with the highest market caps, and then spend your 100 buying 100 of each one of those, and let it ride.
So you're saying, you actually want him to the contract to expire. You want him to actually own those 100.
Yeah.
Right.
So that would be. I mean, this is if they're just doing it for class and they're trying to see who can make the most, then he would have to.
No, he just want to know. He like to buy Jordans and all this other craps. I said, look, if you want to do all that, you need to learn how to make some money, man, instead of taking all my money, boy. You know what I'm saying? I had to pay doggone $1,400 for him to go to school this year. This semester.
I would look into the ones that have the high market caps and then
low price, right?
Low price, and just be on that page. Like, you got a few of them. I don't want to just be throwing shit out.
No, it's good. Yeah. I like this though. I understand what you're saying with the SoFi, because the Super Bowl is there this year, around by February, and hopefully around January. Yeah, so it should be. So let me say this. Let me ask you this. It's at $5 now, right? So let's just say is it the closer it gets to $10, or does it have to get to $10 before you make money?
The minute it starts moving up,
you making money, right? I got you.
You're making money, and then so now if it starts hitting resistance, then the theta starts eating you, and so now that's
what Brandon was. Brandon brought up the theta too, so I got to do research on that.
But the further you have it,
where the theta at? You know where it's at? Let me see. It's on here.
The further you have the contract out, the less effect the theta hits you.
Right.
So that's the difference. And what you having it all the way to January, like we was talking about,
the theta is at negative 0.0023. So what did that mean?
I have to be looking at. I got my hands full right now.
I got you.
Hold up, real quick.
What that mean, Brandon?
What's that?
That theta right there, 0.0023.
So I think the lower the theta, the less time. The more time you have on the actual option itself. So if it was change up the actual expiration on the actual option right quick. So do it for tomorrow. What does the theta say?
That's a whole lot. 0.02 compared to 0.002.
Yeah.
Try it Try it on bar chart.
Did it log me out? I thought I was logged in. What I'm looking for?
Looking for theta, the Greeks.
SoFi volatility in Greeks for December 28th.
That's it right there.
On what I'm looking for, $10.
Yeah.
No, not for tomorrow.
Oh, not for tomorrow, no. For tomorrow, I think I think it'll be like $2 on a.
You got to open interest here. So let's do this one, $5.50.
I think it's $2 on $6 play. I know about her.
It is. It's $2. I'm talking about the theta. So how much is that right there for that $5.50? That theta.
Theta on that is
0.05.
Yeah,
what does that mean?
Okay, so it's different on Tastyworks because on Tastyworks they equate it where the percentage and the actual day are correlated. So if it's like 0.2,
okay, what it say? Tastyworks. Let me do. I'm gonna sign up for that next.
Well, it got the percentage right there.
What?
You talking about the implied volatility?
No, the theta 0.05. What does negative 0.05 mean?
Oh,
you know what? You gotta Google right there. Come on, teach us something.
I don't know. I'm asking you.
Look it up, brother. Come on now.
I'll look it up about it.
Oh, they got earnings too. On November the 1st. They got earnings. What Tastyworks say? What it say?
I ain't got the app up right now.
Okay. I'll look into it. I understand what you're saying though, Sonny. I just gotta look at what the state of all this stuff means.
Okay, I got it. So no, I'm looking at I looked it up right quick. So the theta is basically so it says, for example, the theta is negative 25, then in the days the theta is negative 25 equals 0.099. So basically the however much your percentage is equivalent to how much money you can make within the days that you have left. And so if I guess if your theta, if it starts having more resistance to where, like, say if you bought a put and it starts going up, or if you bought a call and it starts going down, it starts eating up the amount of money you can make within that amount of time.
Right. So that point, what is the negative point? Is the negative 0.0023? What is that saying?
On how you would be able to divide it up?
No, the theta is 0.0023 for an option for January the 20th, right? If I buy a call, what did that mean?
I'm definitely not understanding the question. What does it mean that?
All right, the theta is 0.0023, negative 0.0023 for a call, for buying a call on January the 20th, right? For $10. That's what it is. So does that mean I'm going to make, what is that? I'm guessing that's what, $2? Or is this saying I'm losing $2? Saying I'm making $2? What the hell does the theta mean?
Just it's based on how much time you have left.
So overall,
how much they will take it out.
Let's do this. Uh-oh. Theta tells you how much the price of an option should decrease each day as the option nears expiration, if all other factors remain the same. What should theta be for options? Theta in options is always a negative number as it is subtracted from the rupee value. For example, if the theta is -3 and everything else is constant, the option value for the particular day will erode by 3 points. So is it saying the closer? Is it saying the closer that I get to January the 20th, the value of those options that I buy time decay?
Would that times the point, or would that be minus the point?
That's my point. There you go. That's what I'm asking. That's exactly what I'm asking right there.
Because I was just thinking about it going up or down. Because well, it would still have to be the same, huh?
Okay, I think this delta, not delta. I want theta. Okay, that's Vega. What theta at? There we go, theta.
Right there.
Okay, theta or time decay of theta is enemy number 1 for the enemy number 1 for the option buyer. On the other hand, it's usually the option seller's best friend. Okay. All right. So theta is the amount, the price of calls and puts will decrease, at least in theory, for a 1-day change in the time to expiration. This graph shows how an at-the-money options value would decay over the last 3 months until expiration. Notice how time value melts away at an accelerated rate as expiration approaches. As you can see, an at-the-money 90-day option with the premium of $1.70 will lose 30 cents of its value in 1 month. A 60-day option, on the other hand, might lose 40% of its value over the course of, and the 30 will lose. So over the course of this option, the value will drop that amount. Negative, it would drop until it gets to January the 20th, it will drop that amount. But how do I convert that to $1? That's what I need. Oh, is it dropping that percentage of the total amount? Is that negative 0.0023%?
Guess so. Hold on, we gotta go to Google. Are you on Google right now?
Yeah, go to Google and look up theta calculator.
Or how to read.
Oh, they got a calculator. Okay.
Yeah, just type up theta calculator. Or what was Brandon saying? He might have something better.
Go to Google and type in how to read theta Greek.
Hold on, let me look at the calculator first. Then oh shoot. Nope. Theta options calculator. Options profit calculator. Let me try that. Nope. All right. What you say? Look up, Brandon.
How to read theta Greeks.
Oh, I got it.
What?
Okay. So it says I looked up something on do you multiply theta by 100, and it says multiply theta by 100, for example, is negative 0.04. Right. The option loses 4 cents.
Thank you. 0.04.
Yeah, it says of its value every day.
Every day. So that's 0.04.
Yeah.
0.0023.
But yeah.
So this is less than a penny every day.
Well,
You
every
gotta
day,
multiply by
every day it changes. So if it stayed at the same price on the same level every day, then it'll be different. But every day it changes.
Yeah, but if I buy this option, will it lock it in for that, or does it fluctuate? That's what I'm saying.
Yeah, it fluctuates.
Okay. All right. Okay.
Like say
So
if
let me.
you got that tomorrow, and then
That's all
it
I'm about to
went,
do. Yep. You took it.
and
You,
then it just
let's see where it is
magically
right now.
say it just magically went up to $10, then it would be multiplied by that.
Okay, so right here it'll be $2. It would be 2 pennies, be 2 cents. I would lose 2 cents. I would lose 4 cents. You said 2 cents a day, right? And this is expiring Friday, so I would lose 4 cents on this call. On 4 cents per option. I'm guessing per contract.
Yeah, but then that's when it goes into the other like how your
hold on. Is it 4 cents per? Is it 2 cents per share?
No.
Hold on. Go to how to read Greek Theta Greek on Google right quick, and it gives you an example. I think it's the dollar per day.
Which one? Like what?
Give her the options, and it should be the first one. Yeah.
Right here. Investopedia?
No, not Investopedia. It's the go up. First link right there. How do you read theta value?
How? Oh, do you read that? Okay. Where is theta? Theta K. How do you calculate
right
theta?
there.
There we go. Okay, it's quoted in two. All right. That would be $2 a day. Right.
Remember, you got 100 shares.
Right. So mine would be it would be 2 cents a day. Right?
No, but the 2 cents is $2 in the option. That's what basically we were
No, listen, what I'm saying. This one here is 0.0. Okay. This one here would be 0.002.
Yeah.
So that's 2
cents
times
100. Yeah.
2 cents a day, right?
Oh yeah. If you look at
what I'm looking at,
but
yeah,
but it's on the page of as the price fluctuate up and down. That's what changes your theta too.
Yeah, that's fine. That's fine.
Yeah.
Right. For example, a theta value of 0.02 means the option would lose 0.02, aka $2 per day. Right. That's beautiful, man. Yeah, that's what I was asking. Like, what the hell that mean? Yep. So about you would buy a call for $6. No, you would buy a call for $10 for January the 20th.
No, we were talking about it as an example.
It's an example. I'm saying that's what I'm saying. Example.
Yeah, I don't be doing that kind of crazy stuff on the whim.
No, that's what I'm saying. This is all example. I'm not buying nothing, right? No problem. Oh, this got 51,000 open interest too. This actual one right here, the one you bought up. So
yeah, because the Super Bowl is the first week of February. That contract is the last week of January.
Mm-hmm.
So yeah.
Let me see how much it would total. Look at that. That's expected profit.
Yep. And right now it's been
and look at the most I could lose. The most I could lose is $9.
The contract's been flattening out right now at ranging about $4.55, $5.
That's a long call. This is correct. So let's just say I bought how much I got $60. So if I bought 5, about 6, 7, 63. Right. That's the max it will cost. They say they expect me to lose. Oh, okay. I got you.
Yeah, if you buy one for 9 cents, the lowest you can lose is the most you can lose is $9.
Mm-hmm.
But that's why that's why I was saying what makes it good. Like what I like to do is buying them cheap like that, but buying a bunch of them and just let it go up a couple cents. Because you figure like this, if I buy something about $50 and I really want to make like $150, right? On a tripling it. If I want to do that, then I have to wait a minute for it to really hit my target. Whereas if I buy a bunch of them, it could just move up a little bit and I hit my target and I'm out of there.
Yeah.
Plus I could
So you ain't even worrying about theta. Yeah. Well, not to a certain extent, you're not working because you in and out.
To a certain extent you're not, but you still gonna be watching the using your analysis and watching what's going on.
I gotta look at the delta down too now. I gotta see what that's
but
about.
At the same time, you still want to be on the page of where you can let it go up for a little bit, take some out, and then let the rest ride.
I could put in $65 and I could make up to $1,500.
Say what?
I could put in 65. I could put $63 up,
and
I can make up to $1,600.
Well, it should say unlimited.
Oh yeah, it is unlimited. No, that's what it expected. It expects about $1,600. But it does say unlimited. You're right. Max probably say unlimited.
Yeah, because give you a prime example.
But the most I could lose is $63. So I'm fine with that.
I was gonna say GTE. GE last year, right? Was it last year or I think year before last, where they was ranging at like $10 to $12 for the longest. And then all of a sudden they did that reverse split and it boosted them up to $100 and some dollars. Yeah, so contracts went up.
So to get out of this, I would sell that call, right?
Yeah.
Mm-hmm.
Or you can let it expire.
Or let it expire and get the shares.
No, collect your profit too.
Get a collect profit? How?
Yeah, cause I don't know how does that work?
Yeah. I thought I would, if I let it expire, it would take the shares. It would be extra down.
I think it's only if it's in the money.
Right. So yeah, it's got to be in the money. And let's say you forget about it, and at the end of the trading day, normal brokerages will close.
So in the money is past $10?
No, in the money is
anything up to $10.
The pass.
No, in the money.
It's out of money, in the money, and then at the money.
Yeah, so in the money is. Oh, go ahead, bro.
So if you in the money, you're past your strike price. If you're out of the money, you're hoping it to get into the money. Now this is a call aspect of it. Now if you're
hold on, stop. So we at 549.
Bring up a chart. Bring up a chart.
It's from 549 to $10, right?
Bring up a chart right quick.
What chart?
Bring up SoFi on a chart right here.
Oh, hold on. My phone keep on vibrating. Okay, SoFi okay. Yeah. SoFi, right. We got SoFi. What you want? Which one?
Give me the 5 that. So if your strike price is $5, you're trying to get into $5, right? Which means you're out of the money right now. OTM.
Once I'm doing a call for 10.
I'm just saying hypothetically. Let's say if you did it for 5, like let's say you wanted to put.
Oh, you talking about selling a put for $5?
Yeah.
Right. If I sold a put for $5.
No, you're buying a put though. You gotta.
I mean, I'm sorry. Right. If I want to buy a put, I want to go down past that $5. Right.
Right. So technically, if you buy a put at 542, and your strike price is 5. Theoretically, it depends on what the actual stock is. If it's volatile enough, you'll be in the money already. But let's say, for instance, this SoFi doesn't have a lot of volume in it.
Oh, let's do it right now. Buy put.
Right. $5.
$5. Boom. Open it 26,000.
Right.
So if I bought a put, let me go back. Can I go back out? How would I?
Yeah. Close that up. Yeah.
All right. And if I bought a put for $5, that'll be $5. That'll be $56 per
right. That's just right. So $5 is your strike price. So
the $5 my strike price. The contract, I wouldn't lose too much. I was still less 4 cents
times 10 or times 100.
What you mean?
Remember
4 cents.
Yeah.
Not time 100. Yeah,
no,
this
100 shares.
This time 100. Right. 4 cents. So I would lose 4 cents every day.
You know what make it even easier? Go to bar chart and look at it. And you can see it on bar chart even better.
What am I looking for?
And you're going to puts, correct?
Mm-hmm.
All right, so go to $5 puts.
Mm-hmm.
You're still on the Greeks though. You got to change it to option price. So if you bought the $5 puts, you're not in the money just yet. So anything below that, if you bought, let's say if you bought $8, right, at the $8 strike price, and it's heading towards the $5, you be in. God damn it! Hold up, that's wrong. I don't want to steer you wrong.
No, if I'm going, if it's at $5.49, I'm betting for it to get to $5.
Okay, yeah, $5. Once it gets to $5, you're gonna be at the money. Once it surpasses $5, you're gonna be in the money.
That's in the money, right. So from here to $5, I am out of the money.
Correct. Yeah.
Right. Yeah. Mm-hmm. Yep. They got a lot of open interest there. That's a lot. And it's only $2. It's only $2, son.
Don't do it.
There's a bunch of
it's $2, Brandon, for the for Friday, man. Come on.
No, Sonny, what you
don't do that.
Yeah, don't do it, son.
No, hell no. But I mean, I think it's at what, like 530 something right now? 540 something?
It's at $5.49 right now.
Yeah. I mean, it's not going to get no higher than 570, 580 by the end of this week anyway.
No, but what if it go down to 530? How much would that make?
Okay, how about this? Do you be watching Spy?
No.
Okay.
Watch Spy.
Okay. Whatever Spy does is a slow moving of what SoFi is doing.
Yeah.
So if you do a compare chart, when you watching them move, how Spy moving fast, so SoFi kind of follows them, but in a slower pattern and kind of catches it. So if you expect Spy to run all the way up like that, then you should expect that to run up all the way up like that. But if you don't expect Spy to be running all the way up like that, you shouldn't even expect that to do that.
No, I'm buying a put. So I'm thinking, I'm saying it's gonna lose money. between today and tomorrow, Friday.
Yeah, because if you buy it out of the money, like how he just showed you, that's why it takes away your percentage when you first buy it, and then you have to gain your percentage to get it back.
You got to make that you got to break that break even point.
Yeah.
So the break even is $4.44.
Yes, to collect or start collecting a premium on your money. So that's your break even point. So you're not gonna make money, real money, until you pass $4.44.
Oh yeah, I'm good. Yeah, it ain't doing that. It ain't doing that. Nah, I know it ain't doing that. Not by. Oh no, that's January the 20th though. Oh, let me do it for. That's my bad. I put for $5. $5.
I think the $5 is probably $11. I think something like that.
Let me just do a put for $5, right? Is that $3?
You talking about the strike price, right?
Yeah, strike price. Strike price $5.
Yeah, it's gonna be $60.
No, that's $30. No, that's $3.
Where you see that?
I meant for Friday, buying a put for Friday, SoFi. It's $3 a share. Option. I mean a contract.
Yeah, that's why I don't trust Robinhood.
Yeah.
Check bar chart. Check bar chart.
That's crazy. $3 and it's at 546 right now. That don't even make any sense.
You saying buying a put for
that's what I'm saying. You over the price that you're getting it for. So it's over the strike price already, and they trying to give it to you for a discount for $3 when it's under. I mean, when it's under the strike price. I mean, the strike price is under what the price is. That doesn't make any sense. It's usually expensive like that.
Listen, bro.
That's like if you got it for $1. I mean, okay, I get it. You must got it opposite. You getting it put. You getting puts.
I said that. I'm buying a put.
Okay.
I'm buying a put. I'm betting for it to go to $5.
My bad. The whole time I'm thinking you was talking
about.
Yeah,
I know what you're saying. Yeah. So I'm buying a put. They got it for $3. Robinhood. Bar chart is at $2, so it ain't that far off, bro. Bar chart is at $2 for a $5 put. Buying a $5 put.
Yeah, the puts is gonna be cheap as hell because it ain't happening.
But it may get down to 515. It may get to 520, and I might get.
I mean, I can see your options getting to like $3 or $4.
Yeah, I might make $2, $3, $4 off that, right?
Yeah.
Yeah. That's all I'm saying.
Well, look at your expiration though. You don't have don't have time. Right. You don't really have time for. Well, I guess you do now.
I don't have time for $1, but I do have time for 10, 15 cents. But that's times 100. That's why he's saying $3, $4. And I agree with him on that. That's if it drops.
So what's gonna make SPY drop from now until Friday?
Okay, what's SPY? Let me look at SPY.
Besides the little meeting they're supposed to be having.
The biggest thing is these boys getting their ass whooped, man. Everything getting their ass whooped today.
Didn't they have GDP data or something like that?
GDP coming up. I mean, SPY is still below the EMA. Both of them. I mean, it's above it, but the EMA still. Oh, okay. Never mind. It's above it. It's above the EMA as of today. I didn't see that. I didn't see that green right there.
What you talking about? Daily? No, heck no. SPY is under it.
No, that's a fact. Oh, let me look.
SPY way up under it on the daily.
No, SPY is over.
No, you looking at it on a 1 minute or something like that.
No. Look at this. This is one day chart.
The 200 moving average is at 400 right now.
The 200 moving. Maybe I got something set
Yeah,
up.
maybe you just don't have your setups or something.
What I'm looking at, EMA. What you got? What you looking at?
Okay, I'm looking at my chart at the same time looking at yours.
No, I'm saying you got the EMA.
Yeah.
Both EMA. You got the EMA, two EMAs at 13 and 48, right?
The 1348 and the 200.
1348. Yeah, okay. So go to your trading view. What you on? Trading view or Webull?
I'm on Webull. I'm looking at it right now. Let me take the Fibonacci off. Hold on.
Because I'm looking at over here. The SPY is over.
I think you're looking at the 4 hour. Because I just put it on my 4 hour.
Oh, this is 1 day. It's 1 day. How I adjust it? Yeah, it's a daily. This is 1 day.
Oh.
I'm looking at 1 day and 1 day.
I have no idea why it's doing that one.
What you see, Brandon? Am I tripping?
Motherfucker, what y'all looking at?
I'm looking.
He says SPY is
EMA
above the EMA on the daily.
Right. You see that, right?
Oh, women. What time frame or what?
Yeah, because that's what I was saying. That looks like a 4 hour or something. Because on the daily, it's gonna show more.
No, you're on a minute though. He's on a minute though.
Hold on.
Yeah, move. Yeah, daily. There you go.
Here we go. Yeah, it's still over. There it is. It's still over.
That looks more like, I don't know how your charts is working, but
that's the SPY for you.
That's the SPY.
Because that's not.
Is that over or under? That's over.
That's
it's
on my 4
trend.
On my 4 hour chart. That's what that's doing on my 4 hour chart. Exactly what it shows. Right.
Oh, you see it now, right? Oh, on your 4 hour. Share your screen.
Yeah. See, on the 4 hour, that's what you got it on.
No, it's on the daily.
Yeah, that's the 4 hour. The daily is like this.
Go to your daily.
Hold on, let me take this off. Yeah, this is my daily right here.
Okay, go over. Let me see.
You see it?
Oh yeah, it is. Well, no, your 200, but everything. I don't have a 200.
Oh, well, that's what we.
That's what it is. Okay. So Trading View, you can't do nothing but two things, right? Three indicators. So I got the RSI up there. So let me do a 200. I see what you're saying now. Yeah, we're on the same page, bro. I just got the RSI up there. RSI. Let me create another EMA. Moving average exponential to.
Yeah, we talked about this. I think Monday when SPY was right here at like 360 something, and we was talking about its flag going up and how it had a gap fill at 74, and it was going to reach, if it broke 74, it was going to reach to 82. I mean 80. If it broke 80, it was going to reach to 82. If it broke 82, it was going to reach to 90. And it's been doing that every day since.
Yeah, see, it is under the 200, but that 13 to 48 is over that. So you saying overall? So this is what I'm saying. The way I look at it, overall, yes, over the course of 200, yes, it's a downward trend. But short term, which is the 13 to 48, is an upward trend. Is that how you see it or no?
This is short term. It's on a day by day.
No, the short term trend, I would say the 13 to 48, right?
The short term trend is you saying that it's what?
All right, the 13 is a short term trend. The 48 is the mid trend, and the 200 is the long term trend.
Yeah.
You agree with that?
Yeah.
All right. So short term, which is I would say from here to Friday, it is beating. It is above that short term.
It's below.
EMA. And it's also above the mid-term EMA. So I'm saying
if
from
anything,
a short term.
Listen. If anything, it will be in reverse. So if for it to look good, the 200 would have to be at the bottom, the yellow would have to be in the middle, and that orange would have to be at the top for it to be on something that's good.
Listen what I'm saying. The contract is up on Friday, right? Based on this chart, it is clearly an uptrend, short term, which is what I'm looking for as far as Friday. And look at the MACD. The MACD is green. So everything is pointing to the SPY going up Friday.
Is that your thesis, or are you asking me?
Okay, what do you see?
I see that's BS. Like, I wouldn't do that. That's crazy. If everything has to have a motive on why you're doing it. And then so if you're trying to just get like crumbs, or if you're just trying to pick up like change here and there, then I get it I get it Friday so it wouldn't eat up my theta. Like something like that, yeah. But just being on the page, I'm just getting it because I think that the market's going to go up, or I think the market's going to go down. It don't work like that.
So
like then you have to start going back into the 4 hour, looking at it, looking at your chart. What's up?
Saying, bro? Everything is pointing to. Do you see all of the green? Everything is pointing to an uptrend in the SPY. Do you agree or disagree?
No.
All right.
Okay. Go to year to date. You already
not
said
year to date. I'm talking about Friday.
No. You know what? I'll give you that. Probably to
Friday.
Friday.
I'm talking about Friday. To Friday, it is an uptrend in the short term and the middle term averages. The MACD, the RSI, everything is pointing to an upward trend short term. Y'all disagree?
No.
Okay, cool. So getting into a contract between now, buying a call from now to Friday, how would you look at that? Okay, we had five. What was that? Five? That's SPY. I don't know how to bet the SPY. I never did that. How would I do that? Let me look. Okay. So I would say SPY. How much is a contract with the SPY?
What signal is that right there on the 4 hour?
Let me see. Where you at? Where is it at?
Where I'm showing you right now. Let me take this off.
It's a bunch of lines. What you?
Yeah, let me take this off.
Yeah.
Okay.
Where?
Okay.
Okay, cool. What you asking?
What signal is that?
That's a buy. That's a call signal. That's buy all day.
I mean, but what kind of signal is it showing you on the chart?
What kind of signal?
Yeah.
It's a buy signal. What do you mean?
It's a bull flag. Okay,
bull,
yeah.
Buy, same thing. Yeah.
Okay, so within this week, it's been having its uptrend. We talked about this earlier, right? Based on the earnings and stuff like that. But at the same time, like we're looking at that, and we're looking at it. It has a potential uptrend. The things that we have to understand is going back to. Let me see. Going back to this, I done took off my resistance lines.
You see the RSI at the uptrend. You see the MACD at the uptrend. You see the short-term EMA and the middle-term EMA at a uptrend. I'm trying to see where y'all at.
No, it has the potential to. That's what we were saying. That it has the potential to get to about 390 by this week. But is it something that I would jump into? Nah, because right now the SPY is real volatile. On top of that, with the earnings that's been going back and forth, we still waiting on Apple's earnings. Say if Apple have horrible earnings, you're gonna wake up with your money down the drain.
So you basing all your so you're putting all your basket, you putting all your eggs in the Apple basket?
No, I mean, Apple is one of the biggest sectors that's in the SPY, that's part of SPY. So if Apple does a drop like Meta, or does a drop like Affirm, or does a drop like Netflix, then SPY is gonna definitely drop hard. And if SPY drop, the rest of the market drop.
That's fine. All right. I'm saying doing the option on SPY. What would you do if you're doing on the 28th, which is Friday? Would you do that? You wouldn't even do that, you saying?
Well, you got to, because it's only one you got is 2 days. But
I'm saying you.
Yeah, I probably I'll be doing the out of the money stuff. I'll probably get about 10 of these.
10 of what?
Looking at it, if I was just not doing it, but if I was going to be on the page of doing it, I'd probably get 10 of the $3 call options, right? And then let it get to like $5 and then cash out.
Where is that at? I don't. Yeah, you got to tell me what you're talking about, bro.
I'm showing you. Y'all can't see the screen?
Oh, I'm looking at my. Okay. Hold on. Let me look at yours. All right. You saying what you doing?
Okay, we're going back to.
Okay, you at 380. What you at? What you going 384?
No, we're going to this.
Okay.
All right, boom. Looking for the out of the money.
Okay, which one? 400?
Yeah, 400.
Okay, $400.
At $3.
Oh, $400. Okay, I got $4, but that's fine. Okay, so you say you would do 10 of the 4.
Mm-hmm.
And so you're expecting for the SPY to rise between now and Friday, right?
But that's not what I'll be looking at. I wouldn't be looking for that. I'll be looking for my strike. My cap that I'm looking for. Like my cap I'm looking for is $4 or $5. So I'll get that $4 or $5. I'm cashing out. I don't give a shit if the SPY go all the way up. That's not what I'm. My thing is a 20% in and out, and that's gonna guarantee you real money every time.
All right. So when you saying $4, what are you talking about? $4 or $5? What you talking about?
So I'm hold on, Sonny. Let me see if I can break it down for him. I think he's trying to capitalize off the actual momentum of the actual stock itself.
Yeah.
If you get a stock like the SPY, which is very volatile at times, that adds to your premium, that adds to your delta, and all that stuff working around together can potentially make you some money, even though you bought way out of the actual strike or way out of the money from where the stock is, right?
Mm-hmm.
So that's his strategy. He wants the volatility. He wants that quick movement within a stock. You're still trying to buy. Okay, go ahead.
Okay, let's go back to the beginning. I'm predicting a upward trend in the SPY. based on those charts between now and Friday.
Okay.
All right. He's looking at a option at $4. I'm sorry, at $400, and the asking price is between $3 to $4. It's $4 on Robinhood. So let's just say $4. Now, if he's gonna buy 10 for, so he's gonna put $40 into the SPY.
Mm-hmm.
Everybody, we good, Sonny?
Yeah.
All right. Now, if you get those 10 contracts, you're saying that you want to make about $4 to $5. What are you saying right
each there? Contract is each contract.
So how would you do that? How would that work?
So once you buy into it, right?
Mm-hmm.
Like, okay, you see on the screen right here, say for instance, I had bought that and it's at $1.42. We're just saying $1.42, but it's really $142, right? So when I say I'm just letting it get to $3 or $4, I mean to $4 or $5, I bought it at $3. Never mind, I bought 10 of them at $3. We're just looking at, I bought it at $3. We could just be talking about one. I bought it at $3. I'm looking for it to go to $4 or $5. Reason being is I'm looking for 20%. 20% is going to guarantee me my profit, and I get out. And then I'll have time to trade again. If it goes up, I'll just keep going. I'll bet back in. But
okay, that part right there. Let's start right there. This 20% of what?
20% profit. So when you see it go green, like how right there, it well, it's not going to show you because I didn't buy it, but it'll show you like
no, go back to the $400. I want to follow everything you're saying.
Better example. I think I got a spot SoFi on here. Okay. So
go to SoFi. All right. SoFi.
But this ain't an option. Hold on. What option do I have? Mullen. All right. So you see how it's in the green at the top on the left?
Top of left green, yes.
Okay. So when you see, it'll say how much amount that you made, and then on the right, it'll have the percentage of how much that actually is of how much you made from how much your average price was. And so what I be on is 20%. If I'm doing quick trades, it's 20%. So get in, get out, get in, get out.
So you're saying that you just buying that contract, you're saying that you automatically get 115%? Is that what I'm looking at?
No. This is something I got a paper trade where I practice. I haven't did it in a minute. That's why this contract is way out of the money. But I have a practice sheet that I use with the paper trading, right?
Mm-hmm.
And so I was just showing you on the practice sheet as far as what it looks like when you get an option, and then looking at the percentage and where you look at the percentage at, and where you can see how much you get paid at.
I'm with you. Okay, I got that. I'm with you. So with MULN, is at 58%, 58 cents. The options I'm looking at is at, let's just say I do $1. What you want to do? $1? Let's do $1. $1 is $5 per contract, right?
You talking about just for fun, right?
Just for fun.
Oh, okay, yeah. Because I would never do that. But yeah, okay, 5. You have. Let's see. Let me see if I could just.
Right. So we see a clear uptrend. Something happened today. I don't know what it was, but I'm just using the stock you using.
Okay. Yeah. So we'll just say it was a hell of a uptrend, and
Right. You see the limit price at $5. So you got $5.
Right.
So you buy, if I would have bought, you saying buy 10 of those, and
it's gonna
you're
shoot you
looking at that. Say it again.
You see how it shows the mid price, like how I just bought it right now, and it shows the mid price at $2 at the bottom.
$2,
Okay. When you do, if you do buy into it, it'll lead you on. It'll cash you to $2 instead of the $5.
Mm-hmm.
But hold up. Let me rephrase that.
10.
Let me rephrase that. That's if you put, because they have another thing on there too, where you have your ask. Hold on, let me get on there. Let me do it again. Where they have, where you have your bid, your mid, and your ask, and your asking price, right? And so that's another thing I didn't say. So a lot of times when when I jump onto the options, I go on the bid price, especially if the market is volatile. I want it for the cheapest I can get it for the direction I'm trying to get it.
I got
you.
So you're not you're doing market. You're not doing limits, right?
What do you mean?
Your order types.
Oh no, you get for the option you got to do limit. You can't do market on options.
Okay.
Market is basically if you want to buy partial shares and stuff like that.
Okay, cool.
Or fractional shares. My bad.
I'm with you. Charge your phone up, man.
All
right. Okay. I'm gonna look into it, man. It's pretty cool out there. I appreciate y'all. You know what I'm saying? Definitely. I said look at the Tiblio, kind of look at it a little bit more tonight. I just got it day before yesterday, and it's really my first time kind of looking at it. But yeah, I'm thinking about getting into the option game, man. I've never done it. I just never had to, really. But I might as well, because I'm buying big time. I'm buying 600-700 shares of penny stocks, and I might as well try to. I mean, it just, to me, it's so much easier, man, just to do the penny. But I'm gonna try the option thing.
I mean, with the penny stocks, you gotta. I learn whatever works for you.
I agree, and I agree with you, bro. I don't want to do it, but
man, I had so many people talk mess about the stuff that I'm on when I first started it, and now shit, and I'm living a different life.
Yeah, that's good, man. Proud of you, bro. What you about to say, Brandon?
I was gonna say with the option game, it changed your perspective on how you can, use options in your favor. Like I don't know if you was there that day when I was talking about Netflix and using options as a hedge for your position. Let's say if you got like 100 shares in Netflix outright, and your shares are obviously taking a beating right now. Well, if you do a put on an option contract for one option contract, it somewhat balance out your
losses,
right. Yeah, yep. So that's another strategy you can implement in your actual options portfolio game.
Yeah, it makes sense.
But I mean, options, the basics of options is that's what you need to get down. If you can get that down pat, I mean, you can start with strategies. You can start, cover calls. You can start with, credit spreads, debit spreads. It's.
I had a chick tell me yesterday. I was telling about the Tiblio, and she was saying about the Iron Condor. That's kind of her thing. So it's all kind of lot of different strategies, and I'm not even going to get even close to none of that stuff. I'm straight long call, long puts, and let's see where we go from there. Matter of fact, I don't even think Robinhood. I might could do it on my I think a swim is my That's my, big money account. And I'm sure I haven't even set up options or anything for under those joints. I don't even know how that would work. But I'm gonna give it a try.
Y'all did good.
Mo, I ain't know you was still here. You finna go?
I've been on.
Oh, okay.
Yeah, I have to wind down because if I don't go to sleep, I go wake up in the morning and do pre-market.
Pre-market? Oh, yeah.
Yeah, you gonna jump on in the morning?
I may.
A little bit. Just a little bit.
Yeah, I may. I gotta set my stuff up, but I haven't done so far. I haven't looked at the post the aftermarket yet.
Okay.
So I'm gonna look at that for a second and then see where I go from there.
Okay, that's cool. I'll probably be up at like 6, so y'all jump on with it. I'm gonna do the little videos. I try to do the fundamentals, do the technicals, and then get into something.
Mm-hmm. Look at you've been looking at the pre-market stuff I sent you, the stuff?
Yes.
Yeah.
Yes. I'm on the same thing you long leaps because I and then trying to find where I think that a low point to buy would be. But yeah, so thank you guys for holding it down. Y'all did a great job.
Hold on, let me share this real quick. It's gonna take 2 seconds.
2 seconds.
I mean 2 minutes. Let me see. I know you're finna go. So everybody kind of see what I'm talking about. So what I do is so these are the pre-market gainers from yesterday, right? So I would look at the after hours losers. First thing I'm looking at after hours losers. And we all know that probably Meta and all the other stuff is probably on here somewhere. So the first thing I'm looking at is Works. So far, I'm looking at Zovio. I'm looking at Violin. I gotta pull all these up in the FinViz or whatever I'm looking at and seeing what's popping. I see Conformis. All these joints is down. So I want the stuff that's down because I want to see if it's see where that RSI at and see if we can get some 10, some 20, some 30s, even some 40s, and let's see where we at. And then from there, I go to pre-market, which is the pre-market gainers or even the most active pre-markets. What am I pre-market most actives? I look at those as well, and you see a lot of these are penny stocks, as y'all see, a lot of them. 51, 25 cent, 51 cent, 10 cent, 13 cent. And again, you see these went up, 4 cent, 1 cent, 3 cents. But that's still a big jump, 21%. You know what I'm saying? 17%, 30%, 37%. That's how y'all gotta look at it. Most people don't look at, I ain't gonna put up a 5 cent. Yeah, okay. But I made 25% return on my investment today. How about you? You see what I'm saying? So that you bought an Apple stock, but how much money you made today? $2? So 3%, 20. Yeah, look at this ESSA Pharmacy. It went up 21%. It gained $37, 37 cents. You get 100 shares of those, you made what? $37. Real simple, man. And you go on to the next thing. So that's $200. You would have made $37 off a $200 investment. So you put $800 into I do put $800 into the market every single day, 5 days a week. And from there, you make 2%, 5%, 7%. So if you do what's 10% of $800 every day, that's $80 a day. 20. I'm trying to aim. I'm like Sonny, 20%, and I'm in and out. So you go to if I make $160 off an $800 investment, that's 20%. So yeah, if y'all don't, that's my way of thinking. That's how I've been doing it for a mighty long time. So that's what I do every day. So anybody want to know what my strategy is, that's it. It works. I know it works. I'm not asking you to do it work. I'm telling you it works. 13% off $1. So I put $1, I put $128 up, and you would have made $15 a day off $128. You see what I'm saying? That's how y'all gotta look at this sort of stuff. So these are the pre-market. That's the most active. So it don't even matter. You in the most active mean get winners or losers. It's really how many people, how much volume was made that day. So you got the losers. You're looking at all this stuff every day, and that's what I do. While y'all over here debating and stuff, I laugh and joke with you, but I'm looking at these. I'm looking at Trading View while y'all, So that's it. That's pretty much my strategy. Get about $600, $800 if y'all have it, maybe even $300, and put it into the market every day, and see which if you put in $300, try to get $80, try to get $70. But you're doing that 70 times 350. Seven times 5. That's $350. So you done made $350. You can either stack it and make that $300 turn to $650. Then you flip that $650, or you take that $300 out, that $350 you just made, pay your T-Mobile bill and your electric bill, and maybe even your life insurance for the month. And then next week, you take that same $300, try to do it all over again. So that's it. Mo, that's it. I think I covered enough.
See y'all in the morning. Peace, power, and profit, you guys.
Peace.